Let's share this. Dell. Dell was one of those. Yeah. All right, let's see how it goes. Good morning. A little bit of a market drop this morning. Green AMC, which is a little bit concerning. Just a bit. Wint. I don't know what that is. I'll tell you what, I'll do one right now, and then I'll probably hop around a little bit. I think Beyond is about to blow up, just in case anyone's wondering. It's like a squeeze play. Wint. Okay, so this one has like periodic upthrusts, a little bit of a curling on the 4 hour. Definitely huge distributive cat ears here. 1, 2. That makes it easy to see because usually if they're flowing in like a wave, that's a rejection level, which means you can do a cross really easily. It's always the case. Something like that. That's just really rough. But yeah. And then it looks, everything kind of fits. You can see like a glove. And then doing that on price action can be a little tricky if the chart is kind of wonky, but usually can do it pretty fast. So yeah, this is a bit odd. Looks like a really long-term downtrend. So let's take a look. So last point of support was over here. Last point of resistance was over here. So a pretty significant downturn, but it did follow. You can see right there the rejection, and then going the other way. This is where things get dicey for me because sometimes that upthrust should be included and sometimes it shouldn't. It actually peaked over here, so it may even be better to not include it. But then there's really no support at all. Looks like this one right here on the opposite side. Yeah, that's probably it. So normally, like I was saying, you could kind of use both. That's okay. But I just think that sometimes there's like there's one that's like better than the other. You can see that both are being used here actually. So the first is used to create the initial support, and then there's a hook right there. And then the second, you can see right there, the second being the peak, actually does have a pretty strong interaction locally right here as well. So it's walking down through there, and yeah, so both are being used. There's nothing particularly wrong about one or the other. The reason I use the first one here, there's obviously a trend there, but it's because the RSI peaked first there, and then this is just extra. So this idea of like a buying climax is a little confusing if you stare at RSI, because that push up actually technically peaked on RSI early. So yeah, so I mean we could get I guess we could try to get a little more precise with it, but I think on the whole, like that's actually pretty accurate. It's basically there. So now we've got a clear and evident kind of a, I mean, it's kind of a, the thing is like, all right, so from a bottom standpoint, it looks divergent, but from a top standpoint, I don't actually think it is divergent yet. There you can see that the motion of the actual especially if you look at both of these, the purple and the yellow, your actual RSI and then the moving average, neither of them are particularly up yet. So there's a danger in saying this is definitely divergent because it's not actually making higher highs. Like the trend is technically making higher lows, but it hasn't made higher highs. So there's a challenge there. But I suppose if we were to use that as a sort of a metric, we'd probably be able to identify on that pattern area some kind of a wave center. And I think that's it. I pulled it pretty easily because I looked at this right here and this right here. And then you can see the interaction. So I do think it's probably on top of that, which could be kind of bullish. It's crossed up over it. It could be. So this bowing shape that you're seeing on the RSI is the same as the bowing shape you're seeing here. So that helps, again, visualize and see where that movement actually is. It's very simple. A lot of what I'm doing right now, I guess, in my mind is like, I'm just trying to make sure I understand the correlation between the chart and the indicator clearly. So, is this a good trade or not a good trade? Well, I can't speak of fundamental things. If there's a fundamental reason that this might have an explosive move, it's probably fine. There's not a fundamental reason. It's maybe a good investment is what I'm trying to say. There's not a fundamental reason. I have to think this is kind of like a weird sort of sideways cat ear. So cat ears, the way I describe them is usually there's a buying climax, right? Then you've got a secondary upthrust, and then there's a long period. If it's distribution, there's a long period of distributive action along some trend. Now, traditionally, we think about it in terms of like a wedge, which is kind of what's happening here. You can see there's a wedge action on RSI. Harder to see any kind of wedge action on the price. Hang on, my cat's trying to eat plastic or something. Does anyone else have cats? Do they go after stickers and stuff? My cats go after stickers. Anyways, there's something about the adhesive material and tape. So there is this idea that this could be like the same idea. Like, and I really would suggest that it probably is, because I'm seeing like that push and then a secondary push and kind of a flattening. And that's not pure scientific nonsense. It's just me thinking a little bit abstractly about it. So here's what I would suggest. Anytime I see this, I think it's usually pretty bad, but I do typically expect that there's some kind of an end to the cat ear. Visually, I'm not really seeing where that might be, so it's a bit challenging. 1, 2, 3, but if that's the second ear, then, or the first ear, then I don't know, So here's what I would suggest is that at some point, this will make an upthrust, and it's either going to go, and this is another thing that I'm like, okay, this is not very helpful maybe, but it's either going to go down first, then right back up, and that's kind of the move. That's the last ear, and that does happen. It's like a hook. So instead of allowing it to just run from where it's at, they jump it really hard and then pump it up. You have a chance there that it could recover, but that really is the final move. Another possibility is that eventually at some point it just breaks out and it has like an upthrust. And then you're just trying to determine where that might go. But typically, like, that's it, because this is, especially if it's on weakness, it's going to probably have an upthrust and then drop real low. So at this point, looks like they're coasting around $1. So my guess is that there's probably going to be an upthrust that goes up first. They're checking underneath $1 right now. I mean, it could just dump, but it would make more sense to go back up before you go underneath $1. And so I'm looking for the strongest supports and resistances. So this was already tested, but it's a possibility, and this one seems pretty strong. You can see there were multiple attempts to go through it. There was originally an upthrust and a dive through here for the weakness. So that's a good level. It's just a high volatility zone. There's another little ceiling right here that was a secondary ceiling. That one also is probably more of a conservative target. And then you can see these trending supports. We're trying to get back to something. So that's the other thing I would use right there. Yep. And that's probably it. That's the analysis. Well, how do you see it breaking out? That's easy. That's the easy part. So once you've identified where those waves are, 1, 2, and that's probably going to be the final thing. Where does this apply? I don't know. Timing wise, I don't know. I can't tell. But what I would say is that you would look at simple stuff now. I'm not sure if I'm a big fan of this particular creek right here. I think it might not be the best. I do think that the cross that I did here is probably right, because it did jump over, which makes me think, yeah, it could be imminent. I mean, it could be about to happen. So maybe better to use just kind of the most local. So instead of using this as it cuts through that major trend, we'll use it as a creek guidance. Yeah, I tried to hold above it right here and it failed. But this would raise it up a bit. So that's where the creek really resides. So here's what a breakout, if it did break out, here's what it would have to do. It'd have to come back above and make a higher high than 106. Then it would have to hold a support at 102. And then it'd have to break out and make a higher high than at least 121, 122. So ideally it goes to like 124. And by that point, you're like, well, it's halfway there. Yeah, and I mean, with some of these, this could just go up and be done. But other times, once you've made that advancement, this is where the stock kind of slumps back down and needs to find a bottom. It may even test the low again and come up. And that's really the better trade anyways, because like if you saw something like this, I think it'd be an easier trade anyways. It's less, I don't say there's less risk, but there kind of is less risk because you have a lot more time to kind of interpret it. All of this, of course, could happen in a week, but it may take a lot longer. There's an earnings coming up. It looks like last time it dumped, even though it was positive. It's negative 32, which is pretty bad. So, wow. Yeah, it's not looking great. So they may pump it up into earnings. So, I mean, it's a momentum trade. If you wanted to like buy in lightly and just set a stop, just ride it up. Yeah, I've got another request for Dell. Yeah, after that, I wouldn't expect it to come significantly farther than 140. Right there. So again, it could go past it, but that's where I'd leave it. Yes, you're right to feel that way, Last Riot. AMC is not going low, and the reason that might feel a little off, there's two reasons for that. One is that normally when we do this kind of floaty hook thing, it's kind of like what I was talking about a minute ago, you get this kind of flattening. And I said on the Discord group that I didn't really like the way that the price was acting right now, because after failing to make a rebound here going into the 25th of April, which is like 10 days ago now or whatever, this starting to look like it's just sort of flattening out. And I'm not a big fan of that. I really wanted to see, if it was going to go down, I really wanted to see a hard bottom. And this is okay. You know, these two pushes down, they're okay. But it didn't make any kind of advancement between them. So it's kind of flattening out again. It's like this compression, right? I'm just not a big fan of this price action. Well, isn't that what's happening on the big picture? Yes. And that's exactly what we're talking about when we talk about a massive pump here and dump. The significance of this being very similar to what we just looked at should not be lost on anybody. It is very similar. Okay, it really is. And the fact that this looks almost the same, again, it's a very simple, to me, setup, because typically this is not bullish long term. I would be really surprised if a price like this, a price action like this, broke out and just went. I cannot find an example of it on AMC where that has ended well. I can find examples of kind of the opposite. So if you had something that was like bouncing, like this particular price action does not typically look very good for AMC. Usually means that at the end, if we're fortunate, we'll get a big push up, as in August 2022, for example, or even the Judge Zern decision, for example. You'll get some final upthrust, and that's kind of the end of it, and then you'll go low. And it's because they're pushing into some floor, and it's resisting, but they're going to need to get more sellers on board. And ultimately, the sellers that are on board are already wanting to go down. So it's a bait and switch, like double bait and switch. Boom, boom, right? That's what we need. And I know it sounds horrible, but that tip is more typical than just breaking up. I've just not seen that. Well, isn't it a wedge, Yeah, like kind of. I mean, the way I drew it here definitely looks like it's a wedge. And I'm going to get into some of the nitty gritty about maybe why that is in a minute. I did a lot of work yesterday on AMC's chart. I did not feel comfortable sharing it yesterday. So when you look at the big picture, there's some interesting stuff, really interesting stuff that's going on with on-balance volume, and I want to talk about it. And I guess just an extension of what we've already talked about. Is it brand spanking new things? No, not brand spanking new, but it does illuminate some more. Like it reveals more information, which is good. And the more information you have, I think the better. Why not? As a technical trader, you just want to have more information. For a technical trader, I don't look at all the different indicators all the time, but when I get into one and I want to dive into it, it's good to just kind of see what's happening with it. And anyways, so here's my concern. Let me finish this thought real quick. So here's my concern. Right now it's doing something kind of similar to what we see on this big picture. So I'm seeing this in 3 places. So number one, if we're going to mark it off, one is here. Okay. So this is an arc that's formed. It looks to me like a very similar setup as what we're seeing on number 2, which is right here. Oh, this is getting Inception-like, man. Inception-like. Yes, it is. It really is, because there's a lot of them. And then the third one has already been drawn out. It's the biggest one, which goes up to here. Okay. So what's going on here? Why are we doing this kind of flattening over and over and over again? We're diving down as far as we can, and then we're pumping up weekly, and then we're flattening out again, diving as far as we can, pumping up weekly, da-da-da-da-da. We might have even done one right here, but I haven't really investigated that closely. Maybe we can look. We may have one right now. This might be one right here, this little dive. If it is, it's a change of character because it didn't make a lower low. So what's your big concern about that? I guess my concern is the way in which this breaks out. It's just one of those things where I was worried that 276 was going to be used as a bait and switch for, it's kind of like they're showing you the carrot, but they give you the stick kind of thing. And I think that they might be using it to help drive an upthrust into earnings. And that bothers me because for a number of reasons, because it's tomorrow after close. So if you pump up right here to 276, at first it might seem really bullish, oh, it's going to go, right? But we know that last minute pump, I'm going to put on the 4-hour, that last minute pump is usually not a great thing for us. And what bothers me about this is that you could have a really nasty kind of a slide. Now, does that mean it won't go? Hey, good morning. Good morning. Sorry if I didn't say good morning to y'all. Does that mean it's not going to go? Well, no, it doesn't. And then how does the rest of this work out? Is it just going to keep doing that? I don't think so. I think that would be really strange if it just kept doing this, right? Obviously, that would be really bizarre and unexpected. Is it possible? I mean, I guess it's not impossible, but it'd just be really weird, you know? I think the expectation would be that you'd continually go and hit these drops. I think what's more likely is that if this happens on the first go round, the first drop, that's kind of the place it happens. And then you're really only at risk at 3. So I think that from there, if it hits the low, if it hits either 245 or even 244 or something like that, just one of those like low numbers, it only has to be like a penny, right? And then it breaks up. This is the only other place I'm really worried about. If it can breach 3 here, I don't think there's a problem. And that goes back to all the other analysis we've done. The 3 is kind of my biggest concern at the moment for a number of reasons. I don't have it on this chart right now, but there's a lot of issues with 3 up to 330. I'm very concerned it may not go beyond like 335 or thereabouts. Weirdly enough, that's one of those areas that just every time I look at it, I find that it's sort of sticky. There's a lot of problems there, like this being a big one right here. I just think there's a lot that could go wrong there. And the fact that on the bigger picture, there's a lot of, let's just say, parallels coming down that intersect right here. I'm just nervous about it. And I'm worried, I guess, that it hits like 3 something and it does have another up thrust, but it just goes to like 370 and then that's it. And frankly, even though that might seem ridiculous because you're like, well, you said it was going to go way high. I know, but it really kind of checks the boxes that need to be checked. There's not really any kind of problem with just hitting 3. Like if you just don't have an up thrust, then you just don't have an up thrust. Everything else here was kind of bonus material anyways. And I think I've communicated that several times that like I favor the area from 370 up to 460. If it goes way beyond, which there is support for, that it could go all the way up to like 5 something. There really is some serious evidence that that could happen. I do think that the most likely one is just 4. And that's just based on a lot of things. It just has the most connections. But my concern is that in the end, no matter what happens, no matter how high it goes, there's no evidence that it would go anywhere but this 335. Like I'm doing it every which way I can. And unless it just rockets and doesn't come back, and I don't think that's going to happen, and I've already talked about why I think that's not going to happen, then there's really there's nowhere else to go. Like it would come down to here. This is the place it would come back to like this 335 to $3 area. I think that's where it's going to be by the end of it, by the end of May. So I don't think it's going to stay up here. It's going to be a big push up no matter how high it goes. And then I think it's going to come back down really hard. And it's not just because that happened last time. There's actually a lot of reasons you come back here. And it seems kind of obvious when you look at the where the actual creeks are. We just took a look at them on the other chart. None of them are high up. You know, if you come back down, you're coming back down to those creeks. Well, where are they? They're all down here. You know what I mean? Like the best case is like, you know, hey, let's use this guy locally. That one's really steep. That comes way down. You can see the yellow line coming way down. It's lower actually if it breaks out and doesn't test it. This would be like the next one up. If it builds out a, like right here, if it builds out some kind of support structure, it could come down to here. That's it. I mean, so everything is between, it's super low. That's another reason why this flattening often is used, I think, as a distributive model because the creeks are so ridiculously low. Like you almost always have this kind of action. And the only way to get back to the creek is to come to make a new low, you know. And then even if you have like secondary creeks, which we do have, and this is almost the exact same drawing, right? It's like it's going to come back down to like the exact same level. So it just makes for this really simple, because it's been flattening, it never advances. You know, each of these might rise a little bit, but then every time those creeks go up a little, it's like it's marginal. So everything ends up being really, really low as a result. And I think that's by design. Like you're not back testing any level at all. Like this is basically the pattern here. It's like one of those weird 80s music video things. It looks like a grid that's wrapping space. That's the pattern right there. So I'm like pretty sure that if it breaks out, that's what we're going to see, and it's going to come back to 330. That's why my initial concern has been and will be 3 to 330. 276 would present itself, in my opinion, if it happens now, more as like a fake out. Just again, if the market pumps, which would be surprising, then it dumps on Fed meeting or it dumps on earnings or whatever. I can't really predict how that's going to go. That's a bit crazy to try to predict that. I think that it's very likely that it could have this drop and then potentially go on Monday next week. But that setup, the timing for that setup would be like, hey, it needs to happen kind of immediately. And if over the next week we only make our way up to like 340, I'm going to be pretty concerned. That would be a bit of a flag for me, for sure. So let me talk really quick about this chart that's on the screen. So yesterday I worked on, I'll just say like a simplified chart. And it may not look super simple at first, but it actually is very, very simple, mostly because of the stuff I just added. I think it just makes it a little more complicated looking, but let me get rid of that. It's a very simple chart. So this is based on nothing but pure observation of what happened in 2020 and what my expectations are for these kinds of patterns going forward in terms of trajectories. And then what I did is I actually looked at it on the biggest possible picture. But this is where things get kind of interesting, is that I found a new parallel structure that I just never found before. And I think it was, I know it was because of on balance volume. So these yellow lines that are going up, up, down, up, whatever, over here, those yellow lines are, let me get rid of this one, or at least make it a different color. So it should not be the same as those. I'll just do like purple or something for now. It's fine. So it's out of the way visually. These are just based on the structural setup from last time. And here's what I've noticed, okay? The same thing did happen here, and if it happened over here in this corner in November on that pump up, we are still missing, in my opinion, that bigger move to the upside because it's not there on balance volume. It just isn't. If it's there and we end up with a big kind of move down, we may actually just go. So what I mean is, like, if for some reason it only goes to like 3 and then it dumps really hard, you guys are like, well, that suck, because then we'd all be screwed, people who bought stuff. Yeah, I know. I'm in that same boat and it would suck. But yes, if it for some reason pumps up to like 3 and then dumps really hard down to like $1.88 or $2, is it over? Well, I would say, like, looking back, all right, if you were to just kind of glance at this and make an assumption about what this is right here, you'd probably suggest that we're in this kind of region right now and that there's not really a strong, again, maybe you could argue there's not really a strong reason to go back up again that high. And to that degree, I'd say, well, maybe not. This came back up to basically the middle where the support was, again, which is at like 3. And then it dumps really, really hard. And I've talked about it several times because I talked about how the shift is really weird. It shouldn't actually be that far. It only goes down to, it's like about halfway, like right here. This is interesting, right? You see this like phantom green line almost in the middle, and that represents like the bottom, and that would actually be like a bottom on the previous trend, right? It also interacts with the bottom here in a very different way. I think this is really fascinating because on balance volume actually tells the story quite well. So when I looked at the on balance volume here, it gave me a little bit of a different picture. But regardless, you might suggest, well, why do we need to even bother going really high? I've said it before, I think it's just a need to get that on balance volume hiked. If you just looked at the price action, I do think you could make an argument this doesn't go past like 330 to 370, and it just never goes any further than that for the time being, and then it drops down and iterates this again, but lower, and that's the spring, and that could take a month or 2 months. and it's down here. Okay, there's no massive upthrust. But looking back at 2020, you can see that after the initial drop, this does go back up and recheck that floor, which we haven't really done. We have done a model of that, so to speak. We came in an angle and hit at 370. We hit that angle right there, but we didn't actually come back up to test 4. We didn't come back up into the range at all since we've kind of broke down in December into that upper area. We haven't touched it. We just haven't. I mean, you can look at it visually. You can see that above 399, once it dropped, it never came back up. Interestingly, even though this kind of presents a double, I guess let's call it a double-edged sword. Like there's a good and the bad here. So the good news is, if you want to call it good news, is that if you look at the structure of this setup and where that presents itself in terms of the bottom, you see that wedge that's forming on that cross. It actually is very, very high relative to where we are now. In fact, I went back and I looked at it, and this is where this red line comes from right here, is that if you look at the comparison between this wave structure, in order to get back up there, I had to travel really far to go back test that wave. Now that wave may look like irrelevant at first, may look like I just drew a line in the middle of nowhere. That's not actually the case. It's actually right at the breakout level, the support, and I mean, it's not perfect the way I drew it, but right there. And then you can see the support, and then the breakdown and the hook. It didn't shy away from coming all the way back up. And I think that's important to note, because the whole time this thing is going up, the on-balance value is rising. So this first one obviously could have been enough. I mean, it did technically come back into the range already on the first upthrust here. And then it backs up and it does it again. And it comes really high, higher than I would have expected, potentially. And I think that's important just to note that. So this doesn't come from the bottom. This comes from a kind of like a middle of the wave. So it's developing a wave right here in the breakout structure. And you can see it again if I do it pretty clearly right there, right? And then later, this is where the gap up happens, and it actually comes back to that wave. And there's a lot of things it's checking, but that's a big part of that, right? So it's developing a wave structure from the get-go on the first breakout. There is some early interaction there in terms of trajectory, but it's easier to see it after it's all said and done. So what I did in the local time is I looked at the same idea, and specifically I looked at this trend right here, right there. Now, here's the thing about this one, is that when you look at this trend, it's like, well, that's pretty darn high, right? Yeah, I mean, there's a gap level here at 520. Does this look like it's hitting the gap level? It might. You might also say, well, your line's kind of off, right? Shouldn't it be like a little higher? Well, that comes down to like your discretion. I'm not going to tell you that I'm right 100%. What I will say is that there's very little interaction here, and this is where we see the breakout, but it's very low. And if you were just drawing it to the breakout level, it'd be down here. This actually has quite a bit more interaction in some ways in this range. But then when you come over here, it has like next to none, right? And it does make the target a little lower, but it's still like $5. When you come all the way up and you use the top here, this trend, meaning the last support and the hook level, it's quite steep, to be sure, maybe even too steep. I don't want to change my angles too much. I'll show you what I mean though. So there's no like perfect fit, I guess what I'm trying to say. Like it doesn't, it's not bad. This is very strong still. If I had drawn this and just said, hey, this is the right one, you probably would be like, yeah, okay. And not showing you the other, you've been like, yeah, okay. Because there's definitely an interaction here, 1, 2, a distributive motion, 3, 4. There's a lot of interactions with this trend, but come back into time and there's not very much to go off of. There's one here, 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 and that's kind of what I ended up using. So when I went back and I messed with it, I was like, oh, well, there's better interactions early on that feel a little stronger. CISO crossing 78. So this was one I was like, yeah, maybe, maybe this is like the better one. And that's where I kind of landed. So it doesn't quite interact perfectly with every single thing, but it's there. All right. All right. Well, that's really high, Booksy. Yeah, it is. So what are you saying? You think it's going to go all the way back to 5? I've said it before. I think 460 is probably going to be enough, but I don't know how it's going to move. So it's possible that it could hit all of these targets and have big drops in between, and it's not quite as violent as it was last time with like a one shot. And that would be very different, but it would be consistent with what we expect maybe here, Well, why would you expect it to look like 2020? I don't. I think it's going to look more like itself now. 2020 looks like 2020. Because that's great. What I mean is that if you look at the interaction here on this push-up, and then you look at the interaction here, it's a shrinking version of itself. It doesn't try to copy something else, right? It's the same motion, but it's happening on a really small scale. It even has like the triple kind of motion here with the big back up and then the push and then the rejection breakdown. It's the same thing. So the model of movement, I think, should be based on where you are, not based on just a past occurrence, which again would suggest to us that the model of movement would be this, some kind of massive push for whatever reason that was done, followed by a really big retracement back down, and that would be more consistent with the local area, but who knows? All right. We also were able to get an on-balance hike back here, and that's important to note. This was a pretty big on-balance hike. If you look back at what happened going into December, it was a pretty huge on-balance hike, and this is very different looking than this. So, I mean, you don't have to have some massive upthrust necessarily in order to get it, but I think based on, again, where we are in the structure, it's likely to happen. So, anyways, that's really high. Can I draw it a different way? Maybe, but it wouldn't be, if anything, it would be higher. Like this is the only one I could find. I think there's another really low right here, but that again would kind of suggest that it hits like 4, which isn't particularly noteworthy. It's like right here. It's like, okay, so it hits 4. That was another target you have. So there you go. So when I look at the overall picture, I'm not looking for perfect one-to-one kind of setups. I'm looking for the wave itself. So I think this is the wave. So I think it broke out, it came back down, it found support on the wave. That's the critical thing here. If you just look at it as like a pattern, you can get kind of lost in the weeds and you could find the wrong thing. It's really more about that wave formation. Are there other wave formations here? Yeah, like this is one that should not be forgotten, but it also would not be something we would interact with right now. It's like right there, right? Resistance, support, drop, resistance again. That one is very significant, but again, it's later. You know what I mean? So anytime there's a wave formation, I think it's worth kind of taking into consideration that could be a big part of this. This obviously biggest one right here coming down and retesting here is very significant, and I think it matters. But I also think that we may not be there yet. I've mentioned why I think that is, that we may not have actually gotten down to that low area yet. And I don't think we've hit it yet. So on and so forth, okay? Here's what I learned about on-balance volume, though, while I was doing this. So this is basically just a guide based on what I saw last time. Is that on-balance volume has some really interesting things that happened with the price. And I'm going to do my best to scale it, but it's going to look a little bit flat. And I'll try to, again, keep this on the screen, but it's going to look a little bit weird. So here's what I noticed. You remember that level that we talked about? And I went back and I looked at the... I was kind of surprised to find that this was still playing a part, to be honest. I went back and I looked at the level we were talking about before, which was right here around September 15th, December 11th, and then May 24th. And those are the levels that interact with this blue zone that I've got marked off on the chart. So what happened in 2020 was that they developed an early drop-in. And after the early drop-in happened, there's this repeated test of a on balance level. And then the price gets really elevated for a while. And as the price is coming down, on balance stays very high until the very end, when there's this sudden burst of on balance volume. And in fact, in 2020, it goes up really high. It actually breaks above what would be considered like a widening. If you were doing a one-to-one example, you would say this goes all the way up to here. If you're just doing that, that's what it would look like. And then there's a massive dump that goes all the way down to that blue zone. Okay. I've been thinking a lot about what has been transpiring on AMC, and I was thinking about how, like, you may not need to do that if the goal is not to go as low. So you have to take into consideration, well, what if the goal is not to come down to that level? Then you're wrong about it, because it doesn't need to go that high. As I started like poking around in the chart, I noticed that there was something odd that I just hadn't really seen. And I went back, and all I did was essentially just extend those levels. Now, I don't know how this fundamentally works with the reverse split. I've talked about this before. On balance volume is one that I personally have a huge question mark in my brain about, because I'm like, if you look at the on balance volume, it by necessity it takes into consideration shares, and I think if you can't, you have to somehow reconcile that with the shares available. And so there's this odd phenomenon that's probably occurred where I don't necessarily think this accurately represents what we've seen previously. But since there was a reverse split, it means there's a reduction in shares. It's possible that that now represents, again, as a percentage, a truth. But what's fascinating is that it looks then like this is way, way higher than it was over here. Now, is that true? Maybe relative to the split, it's true. I don't know. Is it true if you were to undo the split and it had the same kind of valuation moves, would it look like this? I don't know. I'm telling you that because it's a caveat here. But what I will say is that, I just put a bookmark in it. You can research it, decide for yourself. I'm not sure. I think on balance volume gets jacked up with splits. I do. Because it just doesn't make, the formula itself wouldn't make sense if you change an underlying variable, like to compare A to B. So, but what's interesting is that when I looked back at where that was, I was like, well, actually, Booksy. No, I looked at where that was. I was like, that's strange. It's actually the June and the January levels. So it's the January and June platforms. And once I saw that, I was like, well, that's odd. Because I did not make any kind of connection with this particular trend right here, right? And the previous area, I just hadn't done that. All I'd really done was just marked off from here, because I was like, I don't really want to use what happened before the split with on balance volume. However, I thought, what the heck? I might as well try it. If it doesn't work, it doesn't work. Interestingly, if you go to 2020, I've also marked off a blue zone here. I'm going to double click so you can see a little bit better. So this was the zone that we wrapped around in 2020 after it hit its peak. And we talked about how there was a drive down and so on and so forth to get back to this level that it was at, right? In February of 2020, I know it's stretched out, but in February 2020, right here, this is ultimately where the on balance volume drops to, comes really, really low. So it stays very elevated. There's this massive upthrust at the end. Price action stays low, and it actually goes lower. But the on balance volume goes crazy. When I went and created a center mark here, I was like, well, that's kind of where the center is. That's the base structure. And it wraps around, you can see I did a 50-50. It wraps around this top structure here, which actually was the peak. It's very backwards, right? It doesn't quite match what you would expect, because you're like, well, wouldn't it be like different? It's not the same. No, but this is the crazy thing, is if you look at the price action as a whole, then you can see that the direction, I know it's stretched, but that's because I'm using the chart. If I pull it over, it's going to go bonkers and get all crazy. If you look at the price action as a whole, it actually follows suit pretty well. If you're trying to look at individual points, it can get a little bit muddied, but that's the direction, and that actually hits I would say fairly accurately through like this guide right here. So there's a clear indication of like higher highs and higher lows. On balance is very divergent in this case. And it sort of sets up in a way that would make sense. What would be kind of crazy out there would be at this point to go back and look at this and suggest that this somehow, when it was here in November, this is 1250. It wasn't that at the time, that it would come all the way back up. That looks like a huge move, and it is. And the fact that you would think, well, why would the on balance volume go crazy like that? And I've been making that argument, obviously, here as well, that like, well, it seems a little out there, and I get it. It does seem a little out there. It seems a little bonkers to suggest that it makes this like huge move to the upside, especially considering like this is not tracking exactly the same way. And I would be like, yeah, I know. But in reality, it's pretty consistent with what we're saying, because we're basically saying that we think that this could come up, let's just use this as an example, and pass through these levels right here and come all the way up and make a new high. Well, take that, as you will, but, looking at this in reverse, you'd be like, I probably would have to do this a little differently. So I didn't use the peak here. I used like the lower bottom peak here. You'd be suggesting this is likely going to happen, like somehow it's going to come back up to 4, which is what we've been saying. So it's like, is it consistent with what our expectations have been? Yeah, it's pretty consistent on the whole. It just doesn't look like that seems possible, right? To some people that would be like, that's a huge move out of nowhere. But if you look at the on balance volume, it actually makes perfect sense, because if you're trying to get back down to that original level that you sort of started at back here, then you would need to have some kind of a massive pump, right? Now, presumably, could it go higher than that? Sure. Again, does it match 1-to-1 with the structure of the price? Not quite, especially if I use this line, it should be coming up to like 5. But if I just use on balance volume, it looks really good. This is where things get kind of like crazy to me, because when I went back and I looked at that low middle that we talked about, I was like, that's the 50-50. And I was like, wait a minute, this clearly goes to that level later. So this is the same mark. You guys are like, well, yeah, but that's like 0. I know. Well, now it is. But it's certainly interacting with that marker on this second bump. So the first bump right here interacts with, is kind of out there, I know. But the first bump right here, the one that happened in October, interacts with January. The second bump, which happens right here, interacts with what we see in 2020 as like a center mark, okay? So what does that mean? It means one of two things to me. Either there's a series of parallels, which I've already done, or, and I haven't done this, or there's actually a wedge that's forming. We don't realize it because our brains can't see it quite yet. It's like kind of there, but kind of not. You can kind of see there's a wedging action, but it's kind of not. So what would a wedge look like? Well, I'll use what's already on the screen, but essentially like a wedge would look like a very similar structure, but it would be like higher up. So this would be going this direction, and then this guy, which I haven't talked about yet, which I'm going to talk about in a minute, would be going this direction. That's not a parallel, that's like a wedge. In which case, this guy, which is another one that I'll have to kind of get to in a minute. There's a lot here. This guy may actually be going down this direction. And this could actually be a wedge formation that is kind of, we're unsure. We think it might be a parallel structure, right? But it hasn't actually reared its head yet. And in which case, yeah, I mean, it's very possible that this is actually like a big macro wedge. And when it breaks out, it's going to follow wedge principles, so on and so forth. All right. But I didn't do that. I didn't do that yet. So if you're waiting to see if that's going to show up here. Is it a wedge? I don't know. It might be. But what I did do is I took a line. So I was like, all right, I have to try this. And it worked. And this is what surprised me, I guess. I went and I looked at, I looked at that first setup and I thought, well, if this is correct, this is what we used the first time we talked about on balance volume in the first long, like 3 or 4 hour video I did or whatever. And I did a couple others after that. We talked about this trend and how I thought it may not get back there, but it's trying to like hit this again. And it really is just trying to do it here on balance. It's coming back to this region, which on the chart right now on the 4 hour, it looks like 13.08 million or whatever. That level is the same as the base level here from April 2021, which is back here. So I was like, well, naturally what I should do is just draw a line on the price action and see what happens. And I drew a line on the price action. And some of you are going to look at this and say, well, I did that like a year ago. And I'd say, all right, that's cool, man. I did not, because I didn't think it was there. I'd actually drawn this one before, but I think I did it steeper. When I did this, a lot of this stuff kind of clicks into place in a way that I guess didn't really click into place before. Because when you look at it as a series of trends that are breaking out, this shift makes a lot more sense in light of like everything else we've talked about. It makes a lot more sense in terms of coming back up and what may happen with an extension if it extends. Because previously on AMC, you had 1, 2, 3, 4, we'll say 5 sections. So what I did is I divided it first. It may look a little confusing, but it's actually very simple. There's 2 parallel structures here. The first is, I'm going to try to my best to like grab it and like wiggle it around, but we'll see if I can do it. Don't ever say that sentence again, Booksy. Sorry. This right here, okay? So what I did is I created a center and then I dragged it down to the base where I think that midline is. And I was like, all right, actually that works really well because that kind of clicks into place. And then these parallels actually make a lot more sense in terms of where the actual creek is. Now I had done this before, and again, when I do creeks, I'm usually looking at tops. It's kind of flexible, but this actually makes it kind of anchored in really nicely and neatly. I'm like, yeah, that makes sense. And now it makes sense that this is actually, not only is this coming back to retest this rising, but this is actually a triangulation. So it's this rising ice level that was kind of the middle becomes like a cross, right? It's the middle of this wave structure going forward. And it's used later, by the way, in 2022 during this breakdown session here. This actually is a sign of weakness in March on that trend. And then the cat ear is a hook in May 2022. So when I look at that, I'm like, oh crap, it was used for like a really long time. It almost looks like a head and shoulder structure, yada, yada, yada. The breakdowns obviously were there. And I feel like I've used something like this before, like a line like this before, but now I'm using it in correlation with on balance volume. And I noticed that this parallel structure, the one that I got from on balance connection from here to here, right, here to here, has generated a parallel structure that makes sense across the board, and this is now an interaction with that. So where's the next one? Well, again, like I looked back over here and I'm like, well, where would it be on this one? I'm taking the same structure into consideration. The only thing I have questions about is whether or not this should be compressed. I don't know. It might need to be compressed because, frankly, it's possible that this, when this did this shift down, that all of this stuff gets squished between 19 and 8. So like all these secondary parallels up here will be squished down. That's a possibility. And that might be something that we're experiencing with some of this weird flat price action here. Instead of getting those bigger, robust moves like to $8, for example, we're getting kind of squished down. I think it's possible it's squished. But if you just take it 1-to-1, it actually presents itself right on that hook line, which is kind of crazy, which is that ice, that wave structure that was trying to be built. Again, is that the only one? No, there's other ones, but it's right there. So if you were going to go back and retest it, if you think it's the same level, then it would be right there. Well, what if it's not? What if it's lower? Well, if it's squished and it's lower, these don't really make any sense significantly lower anyways. You would say that, again, maybe it goes up to 420. So for example, if it's squished, this parallel drives from the original kind of drop-off ledge in September through this parallel structure right here. It certainly makes sense, right? even still, looking at it locally, you'd say, well, it'd probably come up to 422. There's not a lot of risk here. This is starting to sound like the exact same levels that we've already had, and that's a good thing. So it's the same structure. Now, on balance volume-wise, you might say, well, okay, that's interesting. How does that relate to the on balance volume as you already have it? It's another way of looking at the same information. If the goal back here was to drive it up and hit that hook and interact with that on balance volume in that way, at the same time it's doing this, price action structure, this actually fits like a glove. It's really nice. Anything from like 420 up to 5 fits the bill, and you could make it work. Well, how do you know which is which? I don't. And I don't think there's going to be an easy way around this. If we use the shift value, right, you can see that weirdly, again, you guys are like, well, it's not that weird, is it? It is kind of weird because this is remember, I took this and just divided it in halves. So it's like quartered now. What I did is I have two parallels that are divided in half. And then I took a second parallel because you see this doesn't exist above here. It doesn't exist. It doesn't exist above this particular point in time. So I took a second parallel and I plopped it on top to sort of just transcribe an additional layer. So this is the exact same parallel as the first. You can see right here. And what I did is I put it on the center of the previous just to add another section. And then I divided that in half so I could get another set of parallels. Why would I do that? Because it's shifted down, it's now writing a different parallel than it was before. And so if I turn this on, you'll see what I mean. So if you had originally not had the shift, this actually fits, again, like a glove, because you can see that the original parallel structure matches what you would maybe expect here from a resistance on that cat ear. It's that really consistent 1, 2, 3, 4, 5, 6. I mean, there's like half a dozen or more markers there. And the interaction begins right here with one of the earliest preliminary supports back in June. So this wave structure is kind of building across here until it finally rejects. This is the fake out, breakout, and then the big dip down. That is where it came to if you look at the shift value. The interaction is pristine. Additionally, when you look at the shift value and you say, well, where would it go to then? You probably suggest, again, that it's possible that this goes right back up to that same value, albeit, in the lower time frame, you have to make that shift adjustment. If you take that into consideration, it's kind of straightforward. It's the same value, right? Because it's been shifted down, but the parallels are still there. So instead of it being on the top parallel here, it's on the bottom or the middle. Excuse me. And you guys are like, well, which one's which? It doesn't matter. They're all parallel structures. It really makes no difference because in the end, it's going to be relative to whatever you're trying to talk about and accomplish. But what I would say is if you think about it as just transferring the price to a new set of parallels, the shift makes a lot more sense. And then you just have to continue from wherever you are on those structures. That's why I added and introduced these extra ones. And voila, you guys are going to like this. When I added the extra parallel structure, you guys are like, what's happening? That extra parallel structure, and I used where that gap is, the triangulation for that parallel structure appears right over here in January to February 2026. Now, specifically on this chart, kind of looks like it hits a little bit late. It almost looks like, well, why wouldn't it be up there earlier? It could hit that structure in like September. I don't know. Again, this is not the only way I've done this. I've done this like a dozen ways. The fact is it's still in the same pocket. It's still right here. So by shifting the parallels and then adding a second set, it may seem like you're doing yourself a disservice, but I actually don't think it is. And I think that what ends up happening is it's just shifting those values over. It's kind of amazing that valuation right there, if you then take another structure and apply it, that shift actually works very, very well. In terms of what we would expect, really it should be right there on the center of this guy, what we would expect for that second push-up. I mean, it's pretty incredible. to be frank. I think it's a really, really strong argument that we have that this is actually going to hit low and then push all the way up to that $50 area again, because that's where it is. And the shift structure, again, that comes from on balance volume. So maybe you could have found it a different way. I did not. Clearly, it's there. It's not like you didn't have to be there, but it is. But looking backwards, I went back to the original one. I was like, well, what happened after? Because it doesn't stay down low. It doesn't stay in any kind of really strong structure. Or does it? Well, the answer is it kind of does and it kind of doesn't. So in the original on balance structure, this is really, really steep, right? And then as soon as January hits, it's like, goodbye. It's just gone. There was a lack of dilution to some degree after that point in time. I can't remember exactly. I think there might have been one more over here. Correct me if I'm wrong. I thought there was like two. One was in December and one was right here. But I know that after that point in time, there was no more dilution. So one of the issues that was argued at the time was that you have to create more shares in order to do this and that and the other. There was a thesis written by some pretty smart people that were trying to figure it out. I don't know if they were right or if they were wrong, because it never really got proven or disproven, because eventually we had APE and that was a dilution of sorts, but it was completely weird compared to what the expectations were. And then we dropped, so it kind of makes it feel like, well, it's not proven, right? What's weird about, I guess, this setup is that there's nothing really in on balance volume here. As far as I can tell, I can't really see anything that directly correlates to what we see here, except that in this original kind of mock-up, and I'll do this, if you go back and you look at where this goes, eventually it comes back to reset right there. So did this give shorts the ammunition to, or the shorter longs, even if the longs who want to get in and hadn't gotten in, does this give them the ammunition to come back? Yeah. Now, here's where people are going to get irritated, because they're going to look at this and say, well, great. So what you're saying is that essentially Adam Aaron gave him like an out here, right? You're going to be all angry. And that somehow the on balance volume is reset by moving all the way down to here. And that's how they did it. And then they got it lower than it was before, market cap wise, so on and so forth. But remember, it's only true if you don't use the market cap formula. If you use the market cap formula, the one that I had set up, this actually fixes the on balance problem to where it's not like some hugely dramatic dump. In fact, it fixes it in a way that kind of makes like perfect sense, because you can see that it actually anchors itself on balance wise in terms of market cap value right on that marker. And then everything else until that point has been us trying to get back to that original part. And once you get over that, the expectation would be that, well, if I can get over that value at some point in the future, then I would probably be in a really bullish situation, because I'm breaking out now on the on balance volume again. I'm no longer in that low zone. I'm breaking out. Now, that point forward, everything is completely and totally jacked up, because there's no way to know if that trend continues. I have no idea. Maybe it will go all the way down there. I don't know. And if it does, cool. I guess we called it early. It's not impossible. This is close to that blue zone. I mean, it could come all the way down to like 5 or 4 before the end, and it really wouldn't necessarily reflect in the price action either before you get all squirmy about it. You're like, I don't want to go to really low. I mean, it could come down to 180 or something like that, and that could actually happen here. I mean, it's very similar to what happened. This only went down an extra penny or two. It really was very, very subtle. But during this time period, the on balance volume goes from like highs, like the highest it's ever been, to like back to where it was before the COVID drop. That's pretty significant without moving the price that far. How does that happen? I'm not sure. There's something that's happening, I could guess, underlying in the stock price. Shorts covering, creating artificial volume, I guess, plus the buying that's happening, and then a huge sell-off And I don't really know who holds on to what, but then there's actually another massive buy-in on the bottom here in like the 10 days leading up to. How do they do that without running the chart up? I don't know. It's a good question, but they do it. So there's probably more complications to it than I'm able to articulate. Point being is that if you then take this and drive this structure forward, and well, all I did was I did the same thing I did before, which is I took this and rotated it, basically one big breakout and then a walk up. It also equals, at latest, late March to April. Wait a second, Booksy. You said February 2026. I did. So are you just wrong? Let's put it this way. All right. When you have a hook, and I'm just going to do a really simple diagram. Okay. That's it. I'm going to use this line that already is there. When you have a hook, this is all you can really do. If you can triangulate this value, I cannot find a better way to do this. So maybe there's a better way to do it. But if I have a very clear and evident drop zone, so it'd have to be like an LSPY or something like that. All right. I can triangulate where that interacts with the major trend. What I can't do, and what I've not been able to do, is sometimes it's like extremely accurate. Extremely accurate. GME was an example of one that 2 times this past year, it's been like on the nose, like perfection in terms of like where those hits are, right? One was like, well, I already deleted it, but it was like right here. And the other was, which was when it hit like 28 or whatever. The second time was like 27 the second time. And actually that one was triangulated too, the 28, and it went there without looking like it was going to go there. That one was also a triangulation. And then the other triangulation was right here, which is again 27, 28. And this was back in November 12th. Sometimes it's like perfect. Did the same thing with that crazy leap that happened out of nowhere when Trump said he was going to delay the chart for 60 days. And I'm like, yeah, sometimes if you look at it and it's there, it hits it on the nose. But as is the case with AMC, there are times where it either gets there early or you're not triangulating what you think is the actual, you think it's the actual like intersection, but you're actually triangulating something else. One of the things I've considered very heavily, and I've said it quite frequently, is that I think it's by February 2026. But I didn't really consider that it could be one of those situations where February 2026 is a bit of a, and I don't want to throw a wrench on anybody's trading plans, but just hear me out, where February 2026 is another one of these kind of pivot points, and you're assuming that it's going to just rocket up. But what if it doesn't rocket up? Well, then you're screwed, right? Well, most people, when we look at this, if we were thinking that it was going to get there, we would think it probably gets there in a similar way that it did the first time. Hence why people are talking about a May squeeze and then a January squeeze, like an inversion. But that also assumes that you're going to have like one big push up here, a sideways action, and then one big push up here. Which, by the way, this sideways action is significantly longer in some ways than the original one. And it almost doesn't make sense to do that, but that's okay. You know, even if you were to just shift it over, that's the same idea. So there's this concept that like once we have that push up and the sideways action, it's just going to have a second push up again. It's going to be exactly the same as the first time. Look, it matches on your chart. There's so much correlation. Yeah, there is a lot of correlation. This region is a hot zone. This $12 region is a hot zone going into at least by August this year. Here's the problem. We don't know what we don't know. And in 2020, there's a situation by itself that could be interpreted very, very differently than the situation here, which is that when this broke down, this was the actual trend or the support that was broke. Okay? I've talked about this before. This is a 2-year cycle. And what happens in this 2-year cycle is strange, but it is a near perfect 2-year cycle from May 2019 to May 2021. When you look at how long the top is presiding in this region during this like breakdown period, you guys are like, it looks pretty similar to what we have now. Yeah, it's pretty similar. But it takes about as much time. And specifically, if I use the tops here, it actually is like pretty much exact. What does that mean? Does that have to be 1-to-1? No, I'm sorry, I messed that up. It does not have to be 1-to-1, but you have to understand that like when I look at a chart, I don't assume that it's going to be exactly like last time. I think that's a really unwise thing to do. It could be, and that would be crazy, but even looking at this now, I'm like, this is not the same. This is much lower and flatter and longer. It just is. So when you look at the structure here, it's extremely steep. When you look at the structure here, it's not extremely steep. In fact, this points to like April 2026. Well, that's 2 months after February 2026, Booksy. Yeah, I know. So what are you saying? It's being delayed again? I don't know. Maybe. This would have been very different had this happened anywhere earlier. There's really nothing else here that's demanding interaction except for this region in September and this region right here in December. That's it. There's only one other point, but that point is fixed at this point in time. So what are you trying to say? I'm trying to say that if you were going to delay it and you needed to scoot it back, you could have done it in this zone right here. At any point in time, had this made that drop in and come back up, it could have been at earnings. And this pushed up higher, then it would have accelerated everything. Because this is so low and flat, and it is different, it's not the same angle, and I believe that it's correct, because it's so low and flat, it begs the question, and both of them are, by the way, both of them are lower, less steep. It begs the question, like, well, what time zone are we talking about? Just based on this price action, you're talking about March to April, because again, this does technically hit a little earlier, and it doesn't hit the top at that time. It hits like a little earlier, so on and so forth. So, I mean, it could be very much that we're still correct. We're still in March. We're still in February. But it hits around that March to April time period, 2026. And it could last sideways action-wise down to 15 and 12 again, going all the way probably out another year is what it looks like to me. I don't have it on the chart right now, but it's a long time. That's slower than this build out in a lot of ways. It's similar. It's not like extremely different, but you get what I'm saying? So like I can't take this and transpose it here and say it has to be 1-to-1 if it's just not. It's just not. The timing is slower. So why is the timing slower? You tell me, folks, what happened during this time period? The election happened, right? So Donald Trump delayed the squeeze. I don't think Donald Trump did anything with this stock, but I do think that the operators probably saw the writing on the wall looking at his tariff policy and his tariff obsession, because he wants to tariff everything. And by the way, I don't know how you can even tariff movies. If some people are talking about that, movies are digital content nowadays. They're sent around the world digitally. The World Trade Organization says that you can't tax digital content like that. So he's trying to tax, that's the word, illegally, essentially, digital content. And you can't do that. So I don't know how he's going to do it, if he's going to try to tariff it. And that has to do with AMC. So if you're wondering why I'm talking about those tariffs, it's now affecting the Hollywood movie industry. Apparently John Voight or whatever was like meeting with him and said, yeah, that we could use some tax incentives. And instead of doing incentives, he just did tariffs again. Because I don't know why, but he doesn't seem to think that there's any other way. But tariffs are not going to be as effective against the movie industry. It's basically a non-starter unless Congress gets involved. And by the way, I understand there's like Trump supporters out there. I get it. But taxation without representation is unconstitutional. And all he's really done is declared a state of emergency in order to ensue and issue taxes, which is circumventing Congress. In order for taxes to happen on a digital content going in and out of America, you'd have to have an act of Congress to change things. So it would go against World Trade Organization. It would go against our own constitution. It doesn't make any sense to tax incoming stuff like that. You know, it just doesn't. So I don't know if it's even going to matter. He's talking about it. Is it news for AMC? In my opinion, it's not. I don't know if anything's going to come of it at all. It doesn't make sense to me. And that was the first thing that came out of my head. How do you even tax that? Distribution? Like, that doesn't make any sense. It's not a tangible good. Tangible goods only make up like a quarter of our economy now. That's it. And you can't tariff a non-tangible good. So it's really challenging for my brain to understand how this is going to even work. So it's not going to happen overnight. Those people that are like, it's a catalyst or whatever. I don't think it's a catalyst. The news itself could be a catalyst, but the event itself would have to be extremely thought out and meticulously designed. And I don't see how that is going to happen. I just don't think it's going to happen. You could have tax incentives if you make stuff in America, like write-offs. And that's what the guy was talking about. Trump didn't hear that. All he heard was tariffs. Got it. I'll put some tariffs in place. I don't think that's going to be what you think it's going to be. There's so much of the world that's delivered through digital content now, and you cannot just tax it all. It's not possible. And the president, by the way, shouldn't have that power anyways. We don't have a king. That's the whole reason we fought a Revolutionary War, was so that we could avoid a king just levying taxes on everything. And here we have a king who's trying to levy taxes on it. He declared a state of emergency, if you're wondering why he's getting away with it. And Congress is doing nothing. So blame Congress, I guess. Don't blame the president. He's just doing what he wants to do. But Congress is a bunch of pansies. I'm a big favor of the Constitution when it comes to things like this. And I'm really disturbed. I could care less at the end of the day if they decided to do trade if they wanted to, if Republicans want to have more taxes on imported and exported goods, fine. But it should be going through Congress. That's the whole point of the separation of powers. It's the whole point. It's the basis of our government. Well, it is an emergency, Booksy. Well, everything's an emergency. This is not wildly different than it was. You know what I mean? Every president up till now, they could have all declared a state of emergency. And I'm like dumbfounded by some people who are like defending it. Because I'm like, dude, if a Democrat came out and declared a state of economic emergency and then just started doing a bunch of crazy stuff, we would have problems with that. Like adding taxes or whatever on the rich, because it's probably what they would do. Then we would be like, it's unconstitutional. But if your party does it, we'll just look the other way. Right? We'll leave it at that. Constitutional crises. Anyways, movie taxes. I'm done with that, guys. Not going to go back on that. I'm not going to read comments because I know some of you probably angry. Some of you probably agree. We can agree to disagree. I don't think you could fight against the Constitution of the United States if you're an American and say that somehow it's constitutional. But that's okay. We'll agree to disagree. My point in saying all that is I don't think that the tariff on movies is going to have any real impact at all. I just cannot see why it would matter. I can't see that it would be effective. To me, it's a simple question of like, is it legal and is it even possible? I don't even know if it's legal in the end. If they can get it to be legal, maybe they can do it. Is it practical? I don't know. To me, it's just talk right now. So talk is talk. So let's keep going. Basically, at this point, I'm going to be kind of rounding it out anyways. So maybe a good thing that people are dropping like flies now because they don't want to hear about politics on stream. But hey, politics have drastically, I've said it before, I'll say it again, fiscal policy drastically affects the stock market. And the last 100 days have proven that to be true beyond a shadow of a doubt. And I think that when you look at what's going on this week going into FOMC, the fact that he's probably not going to cut rates because lo and behold, the jobs report came back strong. which means that he was right to just be patient, which means that the overreaction about not cutting rates was probably an overreaction. No, he should still cut rates. That's okay. Give me a good reason he should cut rates. We'll talk about it. But I think when you look at rate cuts and you look at growth versus inflation, you have to balance it. I don't personally think that the Fed, aside from what happened in early on in Biden's administration with the money, just inflationary boom, I don't think anything was largely mishandled since then. So, and I'm pretty sure that he was like appointed by in Trump's era anyways. So I don't know why people have so much beef against him. And if the alternative is to like have a puppet that just does whatever the president wants, that's not bipartisan or non-political either. So the counter argument, which I've heard a lot, is, you know, he wants to appoint his own person. I'm like, okay. I mean, I thought the point of getting Powell out was that you think he's partisan, but you're going to just have the president put somebody in there who just does whatever he wants. That's obviously going to be a problem. So that is partisan. Again, double standards, right? Double standards. I'm like super fiscally conservative. I am. You'd be very surprised to find that out if you were listening right now. But I got to tell you, I've not been a big fan of what's been going on. So, especially my bank account. So, anyways, this setup is just a need to follow through. So let's talk about what it means to kind of break out here and go. So I mentioned that I'm a little concerned about a 276 bid on this going into earnings. I'm not super worried about it if it doesn't go up first, or excuse me, if it goes down first. If it goes down first, I actually think it might be better for us because in some ways going down first in this particular situation would be of benefit. A, it gives you an opportunity to potentially buy again if you're still bullish, but B, it avoids the overt upthrust. Have we already gotten one? I mean, maybe. Depends on the way you illustrate this. I think that the creek has been raised because we pushed over it twice here. Don't think we broke that. I really think it would have to be like 276 because that is the level that was established as the distribution zone right here. That's also where the that preliminary support coming down was, and the rejection. That's going to be a pivotal level. It will not run, and I know this is like super simple because you're like, well, it could just run, right? It won't run unless it jumps 276 and holds the support, which kind of goes without saying, but I got to tell you, like, that to me is like a confirmation zone, and it needs to make that confirmation in my brain before it makes sense. Once the run starts happening, my expectation is that on balance volume is also going to break out. When I did the chart, I went back and I redid, and I'm going to just look at on balance for just a second because it's a small screen. I went back and I looked at on balance and I was like, well, if there's this idea in my head that like it could go as high here as like a new high local to the last two, not the top one, and then drop down really low. It doesn't have to though. And I was measuring it out and I thought to myself, well, if the goal, there's another bottom here. If the goal is just to get low and get close to maybe 14 or 15 million, you don't really have to go that far. You could go just to like 49 or 50. And when I did it last time, I think I identified this was a likely sell zone. So I had another chart that I did, and I already talked about that one, but I had found this as a very likely like sell zone. Like once it hits this point, even if it were to continue, like it's already in a sell mode once it hits this top. And that essentially like that's as high as you would really need to go. And as I looked at, but it could extend further, right? So in terms of like necessity versus what happens, that's kind of the necessity, but this could happen. So what I'm thinking about is that I'm going to be watching it pretty carefully. And if we get up to about that 48, 49 million, which is still pretty high, I think that's it. Like I don't really think there's reason. You can look at the price action for sure, but I don't think there'd be a reason to hold if, for example, the price starts breaking down, even if the on balance volume is hiking up still. Once the price starts reversing it's probably going to be after this point if it's not before then. And so once it hits that marker, I'm looking at this like, okay, I'm thinking that we're going to see a sell-off ensue. Price might still keep going up for a bit. That's possible. And you can definitely decide how you want to play it and if you want to exit. What if it just goes and it just rockets to the moon and you're wrong? There's only one situation that I can find where it rockets to the moon right now, okay? And it requires that during the sell-off, I guess there's two, but they're kind of the different sides of the same coin, okay? I'll give you those two, but I think every other situation right now is not going to make sense. Like, in terms of this setup, these are the main two situations. So situation one is it pumps up, goes to like 460, 5, doesn't really matter. But it pumps up, it goes up here, we'll just say 420. We'll just kind of split the difference. It comes back down, and it holds support, and then it re-breaks the creek, and it goes again. Where's the creek at? There's a lot of creeks here, all right? But it would have to hold at least the two main ones, in my opinion. One is right here, which is the top two peaks. So that would come back down, hit like $3. It would hold support. The second is a parallel structure. Parallel structure here. And that parallel structure goes back to really this early cross down that happened in this jump. So this guy is a bit different, and I've talked about it at length again elsewhere, because you can use these when you do cat ear mapping. I'm not doing that right now, but this would be the other one that would need to hold. So clearly you can see it's been like very compressed in there, and that the only times it's really hiked on balance volume is when it's jumped this creek back here like it did it in November. So that's really low. That could be down to the floor again, right? If it hits that part, maybe not a new low, but it could be a double bottom. That's a possibility, but that's not really what we're talking about. We're talking about how it goes again. That's right here. I have a really good eyeball for it. I've been doing these charts a lot. That's why I knew where that was. You guys are like, what? How did you know where that was? I just knew where it was. That is strange, I know. But those are where those two levels are. That could happen as soon as June, but it would have to be like pretty fast, like a big buy up that rockets up and then it comes back down going into May 28th to the 30th, and then by the 28th of May into June you'd be moving up. That's situation one, where it just goes, okay? Situation two, where it just goes, would be if this goes down first. So what that might look like is we get like a flush to, let's say, 330 or something like that, and it doesn't go any farther, but then it goes into a massive sell down. And this is the situation where I don't think this is likely going to happen, but I guess it could happen. So I want to present it like, hey, this is not impossible, but basically this pumps to like 330 and then it drops really hard to like 180. How would it happen that fast? I don't know, but it would have to be a terminal shakeout. And then you basically have to be by the end of May, if you think this is going to happen, back above the floor at 242. So it'd be very, very fast, like this. Then it's possible that this just kind of rockets and does like a moonshot alongside, whatever else. So you're saying like if it has a quick pump and then it dumps down hard, that it could just rocket. Yeah. Why not just go? Because you can't. You have to have, at some point, you have to have this backup, and then you're going to have to hold these two creeks. It has to be a support on those two creeks. And I got to be honest with you, it's probably going to look kind of bullish either way. So it's going to be really difficult to know. I've been trying to say that repeatedly because I think there's going to be folks that, even if it's going to turn out to be bearish, there's going to be a lot of folks who are saying it's bullish while it happens, especially on here. We'll get people in here who have not been on here in like a year, and they're going to not have seen this video or whatever, and they're going to say, it's bullish, buy, and it's squeezing. And I'm going to be like, just wait. because this precise pattern right here is the same pattern, right, that traps us back here. It's the exact same thing. It needed to make a certain rebound. It tried to do it, but it failed. And when it failed hard. It was very tricky. How did we know this was bearish? Well, to be very honest, there wasn't much to it. It had a really mild SOW at the very end. The distributive action failed to come back up. Aside from the shape and that little SOW, it was really hard to know that that was distributive, but it failed. It's the same structure. So how do you know what's going to happen or not? You don't. The same thing happened here too, by the way. This pumped up, it does a little M cross, and it does go up again, but this is what we call a UTAD, up thrust after distribution. So it's sold down, then it buys up again in order to sell again. Cat ears. It's the same, exact same structural idea. This is actually very similar as well. Buys up, sells off, and then at the end there's a hook, but it's trying to advance the whole time. It's very different than what we see in a buy-in where there's that bouncing action that tends to be pretty strong. Right now, we're getting a little bit of that bouncing action. It's a bit of a mixed bag because we are sinking to new lows, but it's there. But you'd be waiting for that right here. What about this bottom? Look, man, there's really nothing, you don't really have any risk at all. I'll tell you this, and I'm just going to throw it out there. I can't tell you what to do with your money, but there's really no risk at all in some ways in my brain, okay? There's still risk that it just never goes, right? It's like 50 or something. But there's really no risk in just buying in the money stuff or buying like leaps here that go way out, or just buying shares. If it drops to like $1.80, who cares? If this ends up taking, if this ends up kind of going up and then maybe it stops a little short at 2 and it does the same thing and it creates this structure that looks like this structure we've all seen like a billion times, you know what I mean? Like it could last for a month or more, right? But if you're smart about it, there's really no reason to be trapped anyways in some kind of a bad. The only people that are going to get burned here are people that buy like YOLO plays, who just buy like insanely short-term contracts. If you're buying stuff that you're like, you know what, I don't know everything here. I do think personally, I do think by August 27th, it will be by 14. $12 to $14 by the 27th of August. I'm going to stick to that because it's a 2-year cycle and I think it's going to do the same thing. I don't know 100% how it's going to get there, but I think that's pretty fair. So there's not really a huge amount of risk in my mind for doing something at the end of the year for 14 or 15, which I don't even think you can buy those, but you could, right, in theory. And then for way past 2026, get something in May if you're worried about early part of the year. April, May. You're going to take part in the move if it happens. There's no reason to put yourself on a chopping block when you have no assurance so that you're not going to lose your head there. So I feel like this is not a complicated setup in some ways. It's really simple. And what you'd be looking for is that re-break here in the test. The terminal shakeout has to have some kind of a buy-in down bottom. Yeah, but what about unbalanced volume? What would that look like? I have no idea. I'll tell you right now, it doesn't add up. Without a significant hike in unbalanced volume, a sell-off here feels, I just don't know how it could be any stronger than what we've already seen. I mean, I could be wrong. Maybe there's some kind of a trigger level that causes a massive sell-off. Maybe it's dropping beneath the floor that causes the massive sell-off. I don't know. But so far, this whole walk down has not exactly caused you can look at it. It hasn't caused the unbalanced volume to really sink that low. So my brain is telling me that doesn't really make sense. Like, yeah, this looks like a triangle that could break down, but it wouldn't go very far. This particular triangle, there's one right here as well. So if you guys are wondering what I'm talking about, these are like iterative motions. And this is a good case for the I think it's Mowgli. He keeps talking about dropping again for an Elliott wave and getting to a new low first. And I'm like, I could see it. Again, it could come a penny below the recent bottom and it would be successful. I don't see why it couldn't go down into earnings and do that. But these are triangles that they don't go forever. Even if this did break down, it's like, well, yeah, you could see it dip, but it's not going to go like forever necessarily. What if it just keeps doing that and it just gets more parabolic? And hey, man, nothing in the market's guaranteed. I've presented the bull case as best I can. I'm bought into it. If it doesn't happen, yeah, I'm going to lose some money on it. You know what I mean? So I'm invested in it. Obviously, this isn't something I'm just like theorizing behind the scenes. I'm not doing anything. I'm legitimately investing in it. So like, if it doesn't happen, am I going to be just as screwed as the next guy? Yeah. You have to have ideas of like what it might look like if it fakes you out. I really think the 3 to 330 mark is the big fake out. I've already said it like 3 times. I'm kind of concerned about that area right here. I don't really care if it goes down first, and I even said it on the Discord. At this point, I kind of wanted it to go down. I don't really like that it's floating here and not making like a hard bottom. This kind of weak. It feels like it needs like a really good red candle for that bottom and then that recovery. So what would be really strong is if it has that drop and it dips slightly below, then it finishes your Elliott wave, right? And then you have a change of character with the breakout where this comes up and it advances beyond 276 and then holds and then it just goes. Like that to me would be very, very strong at this point. I think I also mentioned I don't necessarily think it needs to come significantly lower than 250. This kind of doesn't really bode well with the Elliott wave, folks, because this would be like an incomplete Elliott wave. I get that. But in theory, if that's the phase B bottom, if this has an upward motion first and then drives down, it's doing it right now. You can see it's like pushing against the creek and then it drives back down. I would be semi-satisfied with that. I'd be, again, nervous about the lack of a wave there. But once it got over this top at 3, it's negated. So the biggest worry you'd have with that, I guess, you guys are like, this is crazy, man. Yeah, I know. So this would be like an advancement that's after the bottom, and then you go into a spring. But if the spring doesn't go below the ultimate floor, then it's not finishing the wave. This would be the only situation I'd be really concerned about, is if it came up to like 299, but it did not pass over the top. If that happens, you guys are like, you've been concerned about a lot. I know. But if this happens, it means that the wave is not actually over. There's not been a lower low and there's not been a higher high. So that could indicate that this is about to have like a really massive drop from that point and then go. And now you guys are like, what? Why even bother going then? Because you just could drop. I know. That's the danger, right? It's like you don't know. That would complete the wave without breaking anything. That's not a fun situation, is it? So I'm a little bit nervous about that possibility as well, because I think that's possible. Or maybe it goes to like the 276, 285, but it doesn't break this high, and then it slips beneath the creek again. If you saw that, just be aware it's probably going to go to a new low. Like, and when I say a new low, I mean lower than this guy at like 246. So it cannot have like a fake out move here and then come back beneath the creek. If that happens, it's going to go down. So right now, that's right there. So this would be like a red zone alert. Doesn't mean it necessarily has to go down forever. It doesn't mean it couldn't immediately turn back around. It's still a very big possibility. It's a scary situation, isn't it? I don't like these kind of charts because I don't like the way you have to like wait. But yeah, this could be the actual finishing of the wave. So that's what I was saying very first thing when we came on. I don't really love this, as it makes me nervous that there's like something missing. That we're refusing to go down low bothers me. Like, I don't really want to see this up thrust because I feel like a lot of people, including myself, would be sitting here like, well, is it going to go? And then it may not. And you're like, well, crap. You know? Yeah. This is possible. So watch out for that. It's already, in my opinion, kind of pushed up against that. So it may be in a situation where that's actually happening already. Yeah, it looks like it's kind of doing that. So if it does this drop and then it pumps again, just be aware if it does not come above $3, it's possible it could still drop all the way back down to a new low before advancing. This could be a delay tactic to get it into Monday. I was thinking about that too, is like if you didn't want to run it until Monday, you have 2 days, really 3 days if you use today to set it up. And then tomorrow, while the market's selling off because of FOMC, it's red. It comes down, but it doesn't break lows. And then because of earnings, it goes way up, gaps up to like 287. And then it could just sell back down the next day or so, day or two. I think it's possible that that's what happens. So how would we know? Mostly just volume. You're going to have to watch it in the morning on Thursday morning, because if it does that kind of a gap up motion and then drives the price down, I'm not going to guarantee it, but I'm going to be pretty sure if it drives it, especially if it comes right back below 267, it's going to dump again. This happened to us before. Now I'm thinking about it. I'm trying to remember where that happened. Well, it kind of happened here, this dump, and then it pumped up and went back down through the floor. That was bad. But there was another place this occurred recently. I'm trying to remember. I know I saw it. And it did the same thing here too. It dropped low and then it pumped up and then came back down. It failed to make a new high. I thought it was right around this earnings. But see, this earnings was weird because the price didn't really reveal itself during that earnings. I didn't find it to be compelling in any way. I wasn't really sure till the end. It refused to make lower lows, which kind of leaves doors open for like that week. Anyways, that would be the situation where you're more than likely going to see continuation to a new low. That doesn't mean it couldn't go right after that, but you didn't have to see a change of character. What's a change of character look like in this case? It would be a reversal over the ice. So the ice in this particular situation, there's 2 levels. One's right here. This is the one that you would probably bonk your head against if it faked out, right? The other is, and I'll make it blue so that it looks more icy. The other is here, which is, some people don't like that they have to do like a lot of work for stuff like this, but I'm like, this is just charting, you know. There's a lot to kind of keep in your head, but that's just the nature of it, you know. Well, why are there so many situations? Because there's so many situations. Like, get over it, you know what I mean? A lot of people criticize me. They'll say like, well, you think this could happen, this could happen, this could happen, this could happen, this could happen. I'm doing it for mental preparation, not because I think that everything is going to happen all at once. That would be silly. Obviously, it's going to take certain routes, but I'd be silly to not sit there and think about, well, that's possible, so what would this look like? That's not predicting it. No, it's not. This is as close as I can give you a prediction. If it's going to fake out and then go to a new low and then reverse, this is what I think it would look like. I'm trying to give you guys situations that make sense for reversal. This is one that could kind of screw over some people, is waiting until Monday the 19th and doing like a buyback in here. That's really slow. And I actually think this could even be more diabolical because it could hold on till Monday and probably not even really advance much at all. Do something like that. And then suddenly on Monday, it just kind of goes. That would work. But you'd have to cross back up over the ice here. And that's really where you're going to know. That looks pretty effective to me as a a means of faking out as many people as possible. And you'd also have a new, I don't want to like that, but you'd have a new interaction level right here where you could basically form like a little SOS before advancing. Trying again. Sure. I would prefer not to do this, just so you know. I'm actually going to take a screenshot of it, and I know that this is like possible, but I'm going to screenshot it so I have it, but I'm not going to keep it on the chart. I'm just thinking about it out loud so we can work through it, but that's where you'd have to see it go. I suppose like an ideal setup here would be one that goes ahead and does the flush all the way down. I think that would be really ideal. So instead of, I don't know why it's floating today, so it makes me think it's not going to happen. But probably just go ahead and drop really hard and go ahead and hit the lows going into Thursday. If that occurred, and I don't know how it happens exactly, but it would look like that, I guess. I would be pretty happy with that. Because then if it comes back up, we're in pretty good shape the rest of the week. May even see it kind of build a support here. And we'd have to wait till Monday to find out what happens next. Frankly, if it does something like this, it's going to look kind of bad at a glance. And certainly there's going to be people who say, oh, it's going to drop Monday. But even if it dropped Monday, you could just have it start running. So it doesn't really matter to me. And I almost think that it'd be better to gap up there and just leave a gap and just run. It'd probably come back later anyways. So there's no harm at this point in leaving a liquidity gap if that's what ends up happening. This would also look really bearish. It would definitely look like it's going to dump again. Because if it doesn't make a... So this creates like a gap zone either way. I think it's possible, either one. Because these would be, if it does something like this, this would be a good setup for us because we would have at least the assurance that it already made the low. We'd have to be a little worried about a spring. But then there's a good chance, again, that by Friday the 16th, Monday the 19th, this is built back out. And you're in a much better place then to run up. Or you could go ahead and just gap up, leave the gap, like who cares, and then just run, you know. You'd have to do a quick backup to like this level, but then you could just go. That's a little bit more similar to what happened last year, where it had the gap up and then it drove back down and then ran. To me, that would be logical to do that. So I kind of like those setups because that to me is a lot stronger in terms of readability. This right here is not easy to read right now. This looks like a hot mess to me. I don't like the flat. There was one other thing I looked at, which was these M crosses, these M shapes. And it did do what I thought it might do yesterday. I wish I had drawn it out for you guys earlier. But I looked at it yesterday and I thought, I wonder if it comes back up and this forms like a larger hook or M cross. So if there's a hook, it just drops here, right? It's over. If it's an M cross, then it may actually hold up better than expected. If it can come back down, it could actually make a higher low. And this is still the same situation of... So one's really easy. It just breaks down. It's done, right? Loses that support level right here. You can see it's probably going to come into this pocket, retest to 262. That could be a little bit of a weakness because it already made a high or a higher low right here at 263. But if it walks back down here, then you have a pretty easy place to kind of grab on and see where it goes. This one... could be, and I don't think it's the most likely thing, but it could be a situation of that this actually becomes what we would call like a more traditionally like an M shape. And I don't know how this would work exactly in the current setup. I would imagine it's kind of like that one where it goes up into a potentially like a up thrust right here and drops. But if it takes that long and it doesn't come back immediately to retest, then we may see this set up a little bit later in the week, like going into the end of the week. And that's when it comes down and hits that low. It's a lot slower. It's a little more methodical. Yeah, but this is the fake out move, and then it probably just slumps hard. This works as a way of, this is just kind of a micro version of what we were talking about before, which is like a up, then a down. So it's just a way of understanding what that might look like. Compression here, and it's hard to say why that would happen into FOMC unless the whole market's just kind of doing nothing. Maybe that's the case, and then there'd be a big pump on earnings, and then it would dump in the morning, and that gives you the cat ear. Looks more like a bat ear, like Batman. But yeah, then you could drop down and slump into the following Monday. I don't know. That's a little indirect, but it is also a way that this might move. If it's especially sideways, then that's what I would expect. Why can't it just break out? Never say never, I suppose. The breakout in a situation like this would have to be... Man, I don't know. It's hard for me to see it happening, but because of the way this is set up. Because that still looks to me like the other one. It would be like coming back down here and then holding a support, or doing it like an M cross up instead, so you don't lose it, you just hold it. And then instead of, because this is 1, 2, this would be a 1, and then 2 would actually go up because it broke out. But it's still like the same situation where you've got this really low creek. So this kind of demands sort of a similar response to the other one. You know, you could see that kind of extension up. I wish I were drawing more like bullish outcomes right now, but all of these could turn bullish. It's just about how do you get down if you need to get down, because they're not going down right now. Why can't it just go? I suppose in the grand scheme of things, when we look at iteration and we think about the bigger picture here, if we're thinking about this as like a flattening that needs to, like, that has that pop and then the drop, it's very possible, I guess, that this could just pop, 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 pop through all these iterations. We got like 1 here, 2 here, 3 here, right? And we would see that like reaction, boom, 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 and then that's it, right? So it's just straight up, and it doesn't make a lot of sense in that regard because it would avoid the low, which is really strange. I'm still thinking that $3 is your key level. So even in that situation, if it's just going to go straight up, none of that happens until here. Like, it has to make the higher push over 3. And by that point, if it's going to go, it's probably just rocketing anyways. So it's almost like right now that there's an intentional distance being drawn between the price action currently where it's residing, the center mark here, a high that doesn't go high enough, and a low that goes just beneath the bottom. I think that's important. So there's an implied move here that's developing, and I bet you if you look at options implied moves going into this, it's like 8.8% or something either way. Usually that is the case. So that's flattening out into the earnings, and yeah, the flush up doesn't go quite high enough. It's a breakout, but it doesn't make a new high. So then it has to have that, it would have to have that backup that holds and then goes. It would have to. And then the alternative is just to drop through, which is the same thing. That's why I was saying it's almost better for us to just go ahead and get the drop here. Just do it down first, you know? And then we don't have to worry if when it comes back up. We just have to make the higher high here to like 276. Then it can hit 276. That's fine because it's higher than this previous push and back up. You can't do that first without high risk of distribution. So if it hits the low first, 276 is fine. If it hits the highs first, 276 and above is kind of dangerous. I don't think this is very likely going to happen. This is like the least likely right here. I'll watch it be the one that happens. But this is the like my least likely because I just don't see it without the low. But I guess whatever. This seems much more likely to me if that occurs, if the upside occurs. This to me is like low probability. Just where it pumps, comes back, and goes again. But who knows? Stick on the carrot on the stick, right? Like we know what it would do, but we also have to think about why it would do it. I guess if it did this, it would be a bear trap. But I don't know liquidity-wise what's needed. Like I can't tell you. It looks like there's been enough selling, but it's starting to kind of not go anywhere. It's too much buying pressure. So it's evening out quite a bit as it's flattening. So to me, it's like, would a bear trap really be that effective? Not super effective. It'd be far more effective to get people to start selling off by driving the price back up to these ranges where they kind of got screwed before when this started dropping off the cliff. Spooky, huh? All right. My wife's saying goodbye. I got to go say goodbye. Hang on just a minute. Okie dokie. I had to let my cat in too. He's soaking wet because it started pouring. And I guess he's just not smart enough to get out of the rain. I don't know what he was doing. I'm not. Yeah, sorry. I was reading back the comments. Look, I'm not trying to be over. I know sometimes I do get political, but it's mostly I try my best to get political when it comes to prices and the market. It is relevant. You have to talk about it. It does affect everything. The Constitution bit was just me venting. I'm frustrated. I just don't like it, and it really wouldn't matter which candidate it is. I'm very much in the middle. If anything, I'm starting to become more and more libertarian, which my wife kind of hates it sometimes. We're not the same. We're not the exact same politically. But here's what you can do. Here's what you can do. And I can't give you guys financial advice, but I can just say this. This has worked really well for us in our household. We love each other a lot, and we've struggled through a lot of different things together. We know we have differences of opinion. But the thing is like, you can have different political opinions, but also agree on the problem. And that's the big thing that for us has been really helpful. If you both agree, like, hey, healthcare accessibility is a problem, then you have common ground to have a really good discussion about different political views. If you start with the political views, but you don't assert what the commonality is, then it becomes more confrontational, and we notice that we tend to get more like snippy when we're just talking about how do you fix it. And it's like, well, let's not start with that. Like, what is the problem, right? Do we agree that there's a problem? Why is it a problem? Because for us, a lot of it is like the heart of compassion, as best as we can call it. And we would say, like, we care about these problems because we're feeling issues. We feel the issues, and then we discuss the solutions. But the issues that we feel, we don't always have the same solution, which is fine. Like, sometimes she might want to extend more government protection, and she's not like super. She's kind of like me. She's in the middle. So it really depends on the issue. But like, she might think that the solution is the government needs to do more for this particular problem. And I might say, well, I think if you take that away, that it puts the impetus on the people, and the people should do more. But I really dislike, at the end of the day, what it comes down to is, like, I'm not a party fanatic. I don't care about that. I'd be considered a millennial in that generation. My parents grew up in more of a boomer generation, if you want to call them that. A lot of the boomer generation tends to be more political party fans. I get why they're like that. I'm just not like that. That doesn't mean that every person in my generation is like that. They're not. A lot of people are still highly, one or the other. But I'm just not. I'm not a party ticket person. I've never been. I've never voted for just one party's ticket, ever. And it's always been a mixed bag for me because it's an issue thing for me. So I vote on the issue. That frustrates some people to no end. To other people, they're like, oh, that's refreshing. But then other people are like, you're a pansy. Just submit to one. And I'm like, no. Like, I'm just going to do what I think is the best in terms of voting. And I don't agree with both parties on a lot of things. I think both parties have horrible, horrible policies for certain things. And I think both parties have some pretty good policies for certain things. And I wish there was something else that we could vote, but they don't tend to win. And then I find myself very libertarian at times because I'm getting really frustrated with both parties. And at least the libertarians are consistent about one thing, which is that they really like the Constitution. Like, they're like Constitution fanatics. And I really appreciate that because at the very least, we have a human institution. It's going to be imperfect. But at the very least, if you can't agree that the Constitution is good and that it's the bedrock of this particular democratic republic experiment, then we have a commonality there. We have a structure there. When either party tries to dismantle that or take it to an extreme, I get really annoyed because they've pledged allegiance to the Constitution and upholding those things that we hold dear. So yeah, there's some things like fiscal policy wise, I wasn't against. I'm just not. I wish I could tell you. I don't like. I got to be honest. I'll just tell you straightforward. I don't like Trump as a person. I find him to be extremely manipulative. As a businessman, he's obviously done some things right. He's obviously bankrupted some companies too. But sure, did I say before this election that I thought he would be good for small businesses? Yes. Why? Because he runs on the platform of lowering regulations, which makes it easier for businesses to get started. And when they have more regulation, it can be a little more challenging. And in some industries, not all, those regulations are pretty excessive. Like they don't need to be there. So I'm a big fan of like, get the government out of it. They don't need to be involved in every single, you know what I mean? It's like me, you, and the Holy Spirit dancing at the middle school dance. Like and I'm not saying that, that's a bad example. But like, I don't need the government involved in all my business. Like, it annoys me. So I'm all for that. So like, there's some policies where I'm like, yeah, that doesn't make sense. When he talked about trade deficiencies, I'm like, okay, I agreed with the idea of reciprocal tariffs to an extent, because I was like, sure, if somebody's tariffing you 30, 40% on your goods and you're only doing 5% on theirs, that's weird. But trade is trade. You wouldn't make the trade unless you thought it was a good deal anyways. So it's kind of like a weird thing to me to say, like, I think Rand Paul, of all people, said something like that recently. And I was like, yeah, that's exactly what I think. Because you wouldn't be making that trade if you didn't like it. So it's weird to think like, oh, it's imbalanced, we're getting screwed. I'm like, well, we made that deal. I mean, you could change it, but it doesn't have to be overnight. It was when he went about it with some wonky math formula that I'm like, this doesn't make any sense. It's completely bonkers. You don't get the same goods from different countries, and we don't export and import the exact same thing. So why the heck would we want to import more, I don't know, speakers or something when we're exporting corn? Like, it doesn't make sense why that would have to be equal. And it just doesn't. It feels really messed up to me. So like, you're going to hear me say things about financial policy that you're like, well, wait a minute, you said you didn't like that. And I'm like, yeah, but I have opinions. It's just opinions. You don't have to be mad at me. If you don't like my opinions, that's okay. I'm really okay with that. Like, it's totally fine. And you don't even have to listen if you don't like them. I totally get it. I'm only expressing it because I think that when we get to the bare bones of what's going on in the market, especially recently, this battle between this tug of war, we're going to see it tomorrow, between the Fed and, which is supposed to be an apolitical, non-political party, and the White House. It's important to know it's not just about policy, it's also about what we think of the Constitution and what the executive branch should and should not be able to do. And when you start dismantling or changing the rules, it fundamentally changes the security that you have, especially in the marketplace. The marketplace thrives when things are more certain. When things become very uncertain, it does not do well. It does not like uncertainty. So people don't like to think that the rug is about to get pulled, right? So it's more than just financial policy. It's also what underlines what should be considered the American government as a separation of powers. And that's a really big fundamental part of the Constitution. It's hugely important. I don't talk about every other issue that I have on here. I'm really concerned about the due process issue, because the fact that he doesn't even know what that is really bothers me. And he said as much in an interview that he doesn't know if people should be given due process. And I'm like, you literally just swore an oath to the Constitution, which includes the understanding that you have at least a basic understanding of the judicial branch and like what they're there for. And like, there's multiple amendments that deal with legal matters. It doesn't make any sense to not know that. That bothers me, right? But I don't use that as this as a platform to just spew those views. So I know I just did it, I kind of underhandedly swung that in there. I get it. But I'm just saying, like, there's a lot of other stuff I don't talk about on here.
I try my best to keep it to just the fiscal stuff, but it's very hard when the market doesn't know what to expect. And I think with this whole like Fed thing, here's the argument that I've heard, and I'll look at SPY while we're kind of checking this out, although AMC's having a little bit of a pop here. I'm really not liking that, but whatever. Here's what I'm thinking when it comes to the, SPY kind of rallied back too. Maybe there was some news today along with this technical breakdown. It had a technical breakdown, but then I kind of expected it would come back up no matter what. There's a walk down occurring, so we'll see. And it's failing to finish the S-curve in a timely manner, but there is an S-curve. I think I put it as like the title. There's a pretty big S-curve right here that could pop pretty high. So I was sort of expecting we might see a walk down here. It is very similar to what we experienced right here. There's almost like a head and shoulder type motion. This one looks a little weaker for sure, but it's very possible it still pops up and goes to like near 575. But as we go into this Fed meeting, the expectation is that you're not going to have rate cuts. I knew that this was going to get very political in the Discord group, and I went into it thinking like, just don't stoke the fires. Like in my mind, I'm like, if people want to talk about it, I'm going to let them talk about it to an extent because it is relevant to the market. It became much about it's either Trump or Powell, and the truth is, again, it's a question of like, should the president be involved in the Fed? And the answer is no, not really. Like they have a mandate and they have to be allowed to do it. And some people have said that they felt like it was a highly politicized comments that were made in Chicago. I get it. But at the same time, I'm like, it's possible that's true. I'm going to leave that door open. I don't know. It's possible it's true. He could be politically motivated. And he's just the chair. He's on a team of other people. It's not just him making decisions, right? It's true. Powell could be politically motivated. Everybody has some bias, right? But at the same time, I don't think that what he said has been inconsistent. That's just me. Like, and the only thing that people are saying is that you just can't trust this. It's like that's always the answer. There's a term called gaslighting that gets overused. But what gaslighting is in reality, and it comes from a long time ago. It's interesting if you look it up. What gaslighting is in reality is it's a manipulation tactic that seeks to make you, like undermines your trust in different things. So the idea is like you can't trust what you thought happened. So if somebody's in a manipulative relationship, what they'll say to somebody is somebody will say, well, this is what happened. And they'll say, that didn't happen. And they'll tell them that they were wrong. And it's essentially a way of like making somebody doubt their reality and doubt what they think is the truth. Anytime, and this has been happening for the last 20 years, okay? After the internet was created, the news has been scrutinized for the last 20 years. You know, I think after 9/11, it really started to pick up, but especially in the last 10 years, maybe, the news has been highly scrutinized. Like, you can't trust it. It's fake news. And so anytime anything comes out, now people are like doubting reality. They're saying like, well, we can't trust what we see in front of us because everybody's lying. All right, well, that's one way to live your life. And certainly it creates a lot of conspiracy theorists who are probably taking it way too far. Is there a truth to that? Does the news have bias? Yes. Could they present information in a way that makes it sound worse than it is or better than it is? Oh, yeah. And all news outlets do this to some degree. Okay? It's very hard to just report the news without any bias at all unless you're just reporting the news. So you're just basically, here's what happened, nothing else, right? Very few outlets do that. Some do it, and they do it well, and it's good. But the idea of gaslighting is kind of tied into that, where like you have this theory that like everything you're hearing is wrong. Now, I've heard a lot of this over the last 3 years with the Powell stuff and the inflation numbers. And people are saying, well, inflation, some people will say, well, inflation is still horrible. They're just changing the numbers. Here's what they're really doing. They're excluding coffee or something, right? Like, and that's skewing the numbers. Okay, are they gaslighting me? Or are they saying the truth? I don't know. They're telling me that I can't trust the numbers that are there. But I don't have access to anything else. The reason why I don't think it's not genuine, the reason why I think it's disingenuous, right, is because Powell himself has said repeatedly that he acknowledges that the numbers that they show don't resonate very much with the American people in their households because the price of goods has not come down. This is true that the price of goods has not come down. And there have been other people who have reported on this repeatedly who have said that it's very unlikely that businesses and prices are just going to suddenly drop again. Once you hit this like inflationary period, a lot of times this is just the value that sticks. You have to have wages and other things come up to meet it. This has happened repeatedly over time. Hence why we have to pay more for a stick of gum now than we did 30, 40 years ago. It is part of the ebb and flow of economics, okay? And they're not going to just like bring it back down to levels pre-pandemic because they feel nice about it either. Because everybody's operating on this like higher spectrum. What he's doing is he's tracking inflation over time. It's not the numbers that he's tracking are specifically the increase. If you look at the data, it's not about, oh, inflation's dropping. It's the increase is dropping. It's the rate of change is dropping. That's different. That's like saying you're changing velocity, not necessarily slowing down, if that makes sense. Like in the sense of like speed over time, like distance over time, right? You're like, yeah, but if you change velocity, you're slowing down. I'd say it's more like an increase in velocity. That'd be even a better way to put it. Like velocity squared or whatever it is. I don't know what it is. But like how quickly you're changing your velocity. Like you could still be increasing your speed, but you're increasing your speed at a lesser rate. That's the right way to put it. So I don't fully understand what the dilemma is, why people think that he'd be cooking the books, because he's still saying that we went from like 7 or 8% to like 3%, and they've been trying to get to 2%, and they haven't gotten there. And if they really wanted to cook the books and make themselves look good, they could have just said, hey, we got there already. They're not doing that. And they also have the dual mandate. And then he's explicitly said multiple times that he recognizes that the American people don't feel the impacts of this change because it's still high. Like, it's not something that you would lie about in my mind. So I'm like, there's really nothing about what they're saying that's really going like this, that people think it's some conspiracy. And I'm like, it's not really benefiting anybody for them to lie in this particular way. I don't see it. So if you ask me, do I think they're gaslighting the American public, the Fed? I'm going to say no. I don't see what the motivation would be to do that, because they've already said explicitly the numbers don't really represent what everybody feels. That's unfortunate. They're also saying that inflation is still high, but it's come, the rate of increase has changed. Like, what reason would they have? It just doesn't make any sense. They don't want to cut rates, man. Okay. But you have to understand, like, that is an ebb and flow. You can slow growth or you can slow inflation. It's very hard to do both. The whole point the Fed is there is to try to prevent, the Great Depression from happening again. They're numbers people. I just personally don't understand like, not everything in the economy, not everything in the news has to be gaslighting. It does not have to be somebody. You don't have to go about telling everybody that everything you trust is wrong. I just don't think that's the case. Some people are going to go even further and say, well, everything is inflated. Everything is wrong. It's all a big bubble. Okay, you're going to be the next Michael Bublé or whatever. Michael Bublé. I always call him that. That's not his name, but whatever. I'm like, dude, everybody wants to be the next Big Short guy, And I'm like, look, some of you guys, you're very smart people. You probably see some things I don't see. and you're probably right. But other people are just people. They're just normal people, and they're just parroting what they hear, and it's complete and total bullcrap, and they don't have any basis for it. And that's all there is to it. So I'm like, going into this Fed meeting, I'm like, okay, so we had this really huge reaction where Donald Trump says this guy can't be, terminated fast enough or whatever, which is a weird way to put it because he can't fire him. It's just a strange thing to do it. I'm like, well, he's going to be gone in a year. Well, he's not changing rates. What I heard is somebody that tanked the economy who didn't like what he saw, and he did everything he could to try to fix it. But it's like, I'm sorry, but your tariff policies ultimately did impact the market. Whether you think this correction was needed or not, and I do think it was needed, this is like an excuse, right, for that correction. I get that. Or it's there, right, as a scapegoat perhaps. It doesn't really matter. Both can be true. It was Trump's tariff policies that caused one of the biggest sell-offs in stock history in the last, it's like, of course he's going to do what he can to try to make it not look so bad. But to then just kind of blame the Fed, it was like, well, that was the easy finger to point. And then the jobs report comes back and it's really strong. And now everybody's like, well, I guess the Fed knows what they're doing. And it's like, well, yeah, they just decided to wait. There's nothing particularly interesting about that. Is it frustrating? Yeah. Would I have personally benefited from them deciding to cut rates all of a sudden? Yes, I would have. I would have personally benefited greatly because I was playing a lot of long positions when that talk was going on. Of course, I would benefit from that. Is it important for them to do that right this second? I don't know. I don't think that I'm qualified enough to make that decision, but I would say that I don't really particularly see any reason why they were in need of a rushing to judgment except for this. This seems to be the only thing I can see right now. The fact that the bond market almost collapsed or whatever, which happened in the first 100 days of Trump's presidency, almost sent us into a financial tailspin. Like, what other reason was there to suddenly cut interest rates? Well, Europe was doing it. Okay, different economy, different situation, but I get it. There's good reasons, there's bad reasons that people will say. I will say this. I don't personally think it really matters that much right now that they cut interest rates. The fact that they're not going to might be causing a little bit of the sell-off right now. From a technical standpoint, did we already need to come back down? Yeah, this is an M. It went way higher than I would have expected. We had talked about this previously, and I don't know if you guys remember the doodle that I did, but I had talked about the idea this could be like a bottoming section that actually comes back down, and we'll have to see if it crosses up in the wave. And it crossed up in the wave. It did the S-curve up instead of dropping down. I said, but that would make sense because then it would be like a bottom. Then you could have a bigger rally. Well, we're reaping what we sow, right? So when you have that extension and you do it on weakness, then you're even weaker. So any kind of a pullback here is going to be it's like a fragile stability. This is very fragile. It's going up, but it's fragile, right? And if it has a rug pull, it's going to capitulate and be really nasty really fast. So because this didn't come back down here during this M cross right there, it could have come back, found a support, and then we'd probably be in a different situation now with a lot more strength. That's not what happened. Instead, we continued the S-curve on a little bit of a weakness, right? And we did, and it's okay. I mean, it happened. I made some money on it. You guys may have made some money on it. It made the S-curve up, and that's that. That's the way it went. What I'm tracking right now is a possibility of like a bigger pullback because I'm wondering how high it's going to go before it does capitulate. To me, it looks a little bit like a wedge, and there's a little bit of a shrinking iteration to the upside. You can see it a little bit more easily right here, and I may even have to draw this a little higher. But you can see it a little more readily here on the price, on the RSI, that this is clearly like pumping up to the upside. It looks like it might be about to break down just using the moving averages, it certainly looks like it's breaking down right now. But basically, it just didn't make that final extension, which I was like, I don't know. Maybe that doesn't matter too much if it does or it doesn't. And I guess it doesn't. But it didn't, to me, it didn't make that final extension. I thought it might have a final push up right here and then drop. It hasn't done that. So I'm thinking at this point that this drop may actually instigate a final push up on the RSI price action as a kind of hook. It's sort of the difference between, again, we talked about the last cat ear being like a finishing versus a push-up. That's later. So I had done a lot of different like doodles and junk, and I post them in the Discord, but like this is possible that you get another push that actually goes quite high after a drop here. Because again, this is a wave cross. So it's still a 1-2. Yes, there's an M here and an M here, but there's still a 1-2. There's also a bigger 1-2 here. This one would have to come pretty darn low. But yeah, you could have a buy up or a sell off here that finds some support back at like 550 or something and then goes, or even higher. And it could still have another high in it because of the nature of where this is. This could easily drop and then have a hook that goes much higher. We would see that in the RSI and the buyback in. And I don't personally think that's unusual. It actually would make sense here to reject off this in that way. Albeit, it's a complicated question because there's a long term, I found that there was a lot of probability that this doesn't actually come up till late in the summer anyways. I saw a lot of indication that you might actually get back to 600 later. The reason that I'm not sitting here like with 100% certainty is mostly because of this widening here. So when it made the first bounce, it jumped off at a higher low here, and then it immediately came down and pushed low again. And what that could mean is that we're walking our way out and creating a more stable structure, and we haven't done that yet. So if you look at the RSI and you were to drag that top one down, that would be a little bit more of a stable structure, right? So this is all the peaks are lining up, but the bottoms are not. We're kind of missing that bottom. That makes me wonder if there's another trend at play that we're just not really there yet, And that could be, again, indicated by perhaps, in this case, a top like this, if this ends up being a top. If you take that back down to the original bottom, you can see that it actually looks like kind of what I drew, which surprises me, like right there. I didn't do that on purpose. But yeah, so certainly, like, could this be generating like a double top type action that then walks back down? Yes. We have gaps down to 528. That would be easy enough to fill. There's other indication here of a potential inverted head and shoulder. 1, 2, 3. Shoulder line versus neckline does seem to be aiming that direction. So there's a lot here that would suggest that you could be coming back to this 530s zone before anything else really happens. So I had just kind of doodled what that might look like. In terms of whether or not it reaches the top, I think that's a different question because head and shoulders are a bit tricky like that. On the one hand, it's like if this is at an angle, then this is sufficient. It actually kind of went to where it needed to go. If it fell short by like $1. You know what I mean? It's not much. So certainly, like if this has a hook to the upside and it comes back up, could it be like that this hook only goes up to 568 again? Yeah, because now it's further over. It may not make a significantly new high. That doesn't help, right? No, it doesn't. But, from a more traditional standpoint, would a shoulder be sensible, to maybe come up to 575 back to this level? Sure. On the big picture, where did we end up? Well, you can kind of see. We look back and we see that we tested this low here. We haven't yet tested this one again, which is kind of the one I'm looking at anyways. So we're going back and we're kind of checking all these levels again. And these were supports before. This is a big one that we're at right now. This might be one that could hold again, or you could see that dip down to where I've got the dotted line. Those are, the levels are 560 and 555. Pretty easy levels to remember. Certainly those could hold. It's possible in the local time, local areas. I mean, and then present another push-up. On the whole, do I think that there's anything particularly positive about what we're seeing right now? Again, no. I think that we've kind of pushed up on weakness. We've exhausted our efforts here. I'm pretty sure if this is a wedge, this is beyond the 60% mark at this point. There was clear indication again that 595 and 583 were being targeted. That's been the same throughout this whole area though. So bulls have been trying to get back there forever, and I think it's because it's that March 4th region here. And we talked about that previously. Like the whole market was trying to back to March 4th, this area. It makes sense because that's where the big floor is. If you look at the March 4th bottom right here, dropping into there, this zone right there is really where that upper range built. So everything right there would be ideal. So if you were going to do like a inverted head and shoulder, could you do it here and potentially get back up to that area? Yeah. I did a measurement on this, and it's a little tricky to do necklines when they're at an angle. Usually you want to use like the middle, so I should do that. So like, yeah, I think that's pretty close. Right there. Anyways, so this becomes like a 50% marker right there, which makes sense because it is where that bottom was and then the breakout. So it's kind of already in a good spot. So if you were to do that and then break out later, way later, this could lead you up to like 600 pretty easily. So this head and shoulder, inverted head and shoulder works very well as a potential if it builds out. Does it have to be right there, Booksy? Why can't it be earlier? It doesn't matter. You know, it could be earlier. I did a lot of this with extended hours on as well. So some of these lines aren't matching, but the concepts are the same. Basically, it's like if you took this up, if this breaks down, could this end up being a pivot? Yeah, or could end up being like the highs here in May. So it could be as soon as May. It could be as late as July, which doesn't really help. But the idea is that you'd be buying in probably down low, right? And then breaking back out, which is kind of interesting because when I saw that, I thought to myself, first I thought, well, crap, because I had some like 585s or whatever that really got crapped on, right? When it hit this peak, it didn't pop to 5. I was hoping to get 570. Didn't get 570. So I was like, You guys like, what? We had like 569. Well, what I mean is like the 575 area right here, I thought we would breach that. We didn't breach it. So bad TA, I guess, on my part. We didn't get there. I was kind of frustrated by that, and my calls sank pretty bad. But then I was like looking at this thinking, this is kind of interesting because when you go to IWM, I looked at IWM and I thought, this is actually pretty similar to what I thought might happen. I had a push up here that went down again and came back up. And that was a long time ago. So I was like, that's interesting. I was thinking it might break out of like a wedge and then go again. And we have some diagrams from whenever I did that a while back. Okay, but I haven't largely looked at IWM because I got really frustrated. I lost money on it. And I basically said, I don't like you anymore, IWM. You do me wrong. I'm not going to keep being your little... I'll just say puppet. That's a nice word. So I was like, all right, whatever. Maybe this has like a breakdown here and then comes back up. IWM is actually, in some ways, it's clearer in this regard than SPY because it's ugly as all get out in other ways. This is an ugly looking chart, but there is a series of parallels that we lost, and we would kind of need to come back to like 193, which, and maybe even as low as like 191, which might seem a little bit low. But the truth is that this is an irreplaceable right here. This is like an irreplaceable creek line. You can't ignore this one. There's some of these markers that I draw that I'm like, meh, you know, there's extra. This is not extra. This one is extremely critical. This is where it broke out July last year. And we're in a similar space now coming into the same year. So it does look like it pushed down, it rejected on it. I mean, it held it, I suppose. Then it failed through it, gap down through it. You have this massive drop and this massive pushback up. But it hasn't actually done anything to hold that as a support. It's just pushed back up. It's done nothing to check the support. So this does kind of bode to the favor of like a retrace back down to like the 194 region. If you were to look at it that way, yeah, I could have an extension one more time. There's plenty of space, and that's why I'm not really sure. There's room here. There's room to come up. It didn't check everything in the world. You know, there was a creek from way back here. It's like the last cat ear creek. Sounds like a really bad movie that they would do a Mystery Science Theater about, the last cat ear. They would do a retest on this would make sense, and we didn't get it. So part of me was thinking like, well, 60% is probably already come and gone, but this actually hasn't broken down, unlike SPY. This hasn't seemingly broken out of its wedge, at least as far as I've drawn it. And I think that it looks like it's still kind of contained, which means that, yeah, I could have a dip here, and it did dip below right there. You can see that. That's the widening. But it could hold that and then just go one more time, and that's like the secondary push, which I was looking at on SPY thinking it looked less and less likely. But on IWM, it kind of makes sense. This actually does go back to the March 4th region then, if it does that. So the reason that I said that was interesting is if you recall, when we did the big run up in May, the IWM, which is your Russell 2000, was already 80% of the way up its top when AMC ran. It was already, and GME ran for that matter, it was already like 80% up. It was leveling off. It had starting to round down, and it does peak at the top on May 15th. May 15th, May 16th in 2024. But it had already run up, again, like 80% of the way, and then it peaks going into May. This is kind of backwards than what I'm talking about here, because I'm like, well, it's coming down. That's kind of weird. If you think it drops here, then that means it's coming down into May 15th. It's going to be too low. Is the market in a different place than it was last year? Of course. Of course it is. So could it be different? Sure, could be different. What motivation would you have to bring it down here, though? I don't know. Aside from like the retest on like this, I don't really know. Why not do it after May 15th? It's a good question. It's an important question, right? And it's one that's worth considering, because we look back at 2024, it definitely peaks on the 15th, right? In time for, the third week of the month, OPEX. I think there's an interesting dynamic here. I don't know for sure why, if this matters to people or not, but you can see that May to May, this actually is pretty darn close, right, to being the same level. If you come back and you get that head and shoulder going into the end of May, it's very similar. Would that matter to some people? Could. But in addition to that, it's like, well, if I just think that it's running up into May and the idea is just to get those hiked up, then I might see a drop end of May before anything else happens. That might line more up with this as like an end of May drop that resets. But if that's the case, then we would expect this to sort of chop at the top for a bit longer, going through May 15th, and then drop later and like really flatten out here if it's similar. Okay, I don't know if it's going to be the same, but if it's similar, that could happen. Why that matters is that if you look at again, where is IWM? It's a double-edged sword here, because it has not hit that creek. If it went sideways into the 16th, it could hit that creek without making a stronger advancement. We could chop and go sideways here until near the 16th, which again, if that's the peak, that would be enough to sort of say, yeah, it's there. It went to that creek level, it hit it, right? Maybe it doesn't have this massive move in it. Maybe it does at some point, but it doesn't really matter, because what matters is that if it gets there and it does so in this way, this is very similar to what happened in 2024 with regards to how it peaks going into May and then how AMC runs. So if you go back and you look at, where is it here? I gotta find the area here. You guys are like, well, technically, Booksy, that doesn't look like a peak, does it? No, it doesn't. It actually peaked before then. So it peaked in April, which is come and gone for us anyways. But there was an April sell-off, right? And then it peaks again right here in May. Pretty similar, right? Like here's an April 1st sell-off, and then it peaks again in May. I don't know if you guys have ever done this, but if you go back and you look at, it almost looks like an exaggerated version of itself, doesn't it? If you go back and you look at the historical trends for the market, a lot of times they're very cyclical in terms of how they move. This is like near 1-to-1, which is very strange. It's just hyperbolic. Like it's extreme version of the same thing. But it really does look extremely similar, doesn't it? This push up and this push up. And this. I mean, all of this looks essentially 1-to-1. I don't even know how, but it just does. If you just showed me that, I'd be like, is that the same chart? No, it's not. That's actually from the year prior. It's just flat. Weird, right? I mean, I think it's weird. So what does that mean? Well, I guess it could mean a couple things, but number one is like I might be right about what this is going to do going into July. This is also July 11th. What the F, right? I don't know how to say this other than this is some kind of baloney. He waited, and I don't know, again, it's like how in the world could it have been the same? That's a really good question, man. There's that one guy who was kind of chirping in his ear about it, but he specifically said he wasn't going to delay them, and then he did. But when he gave that order, I did the math. Maybe I got it wrong, but it was July 11th was the 60 or the 90-day window or whatever, 60-day window or whatever it was. And that's crazy because this is the same exact build. What? Yeah, I know, right? What this would suggest is if you look at these parallel structures, that potentially you can see that this runs the same parallel down. And it's certainly very odd and very convincing that this looks like the exact same thing, but year over year, just more dramatic. It would imply that we may be able to find this angle if we know that this angle is consistent, then it should be the same thing. Guess what? You guys like, what, Booksy? You're going to tell me anyways. Well, that angle is the same angle. Like, at least for now, it could be very dramatic, but like it's clearly been the same. So if it's the same angle, then this is going to go to like 207. It's not going to stop where it stopped now. I'm not a big fractal person. I'm not. I'm mentioning all this because I'm doing the TA here and I was thinking about like, what happened last time? What happened last time? What happened last time? Like it is super similar, right? There's a lot of similarities. There are some differences, but there's a lot of similarities. And last time, if you recall, going into May, that AMC ran at what point? It ran after its earnings. There was a Friday or something like that. And it ran the following Monday. Okay. But it ran up really, really hard on like the 13th. And it ran for 2 days and then it dumped really, really hard going into Friday the 17th. Okay? And then oddly, we come back and we look at it later, and I looked at this with on balance volume too, and I thought the same thing. I was like, man, it's super, super strange to me. So it basically just resets the on balance volume by that date, as if that was really important to get back to that particular trend right here by that date. It's like a fixated wave. They just waited to the last possible second to finish it and hit the marker they wanted to hit, which in effect boosts this way up. They move away from, this is the slingshot that I talk about. It's like moving away from your target, and then all of a sudden you don't, and you're just there. So this was a 3-day move, 3 to 4 day move that ultimately lands going into the 17th. And when I go back and I look at IWM, I'm like, okay, so on the 13th, AMC runs up. So it stays super, super low. It's going in this like downward motion, obviously moving completely the opposite way in some regards to the greater market, because it's just going down. And at this point, this has already gone up and it's in an SOS mode. Sounds familiar, right? It sounds like what happened in 2020 when AMC went down to a spring. The rest of the market was going into like an SOS. It had already come up to its place of breaking out and it was about to go. But it's a little different because obviously, you know, AMC didn't stay up there and it's like part of the lower setup. It's just like spaced out differently. So it's a different part of the schematic. It's not the same part. But right here, you can see on the 13th, which is a Monday, this is the place that, of all places. So like if we were looking at this, it'd be like AMC's way down here, and then all of a sudden, and I know this is not the same. It's not going to be the same. So if you're expecting it, it's not going to look, but just as an example, right? That this one, like from April, where that breakdown happens down to the bottom, AMC's created this bottom. It doesn't move. It doesn't go anywhere. Again, we can switch back and forth. You can see right here, the end of March, this is where that big drop-off happens, April 1st. Sounds familiar. It's a similar time frame as now. It's the same here. You got the April 1st drop-off right there. So AMC is like doing this weird like alternate universe type thing where it's going down. It just doesn't stop. I think the bottom was on the the 15th. I was just going to double check before I said it out loud, which oddly is still like the same or similar time. So it actually hits its low. We're going to do it proportionally on the 15th. And then, so this is kind of a weird way to do this, but this just goes sideways essentially in effect until there. So it's not that low, sorry. All right, it fails to jump the creek till way later, and then it goes up, and it goes way beyond what expectations would be. You know, goes bonkers, bananas. And then if you look at where the 17th is, which is the third weekend of the month, right, I think, which is your options stuff, it comes right back down, and it's essentially the same. Notice that this is at the same level that it's at. And then if you look at where AMC is, it's at the same level that it's at right there. Pretty crazy, right? But what's that level? It's the April 1st level. Well, if I tell you, you're just going to roll your eyes because you're going to be like, oh, you already said that. Yeah. So the breakdown starts here at $3. If you look at April 1st, it's 277, which is really low, 276. You're going to be like, no! Booksy, no! It goes up to 287. So what you're saying is going to pump and then come all the way back down to that level right here? Yeah, pretty much. But that's what I've been saying is like, I don't think there's a lot of controversy on my part. I think going up to threes, it's like, that's the level. So I think it could be back down. If it happened to 1-to-1, the expectation would be it pumps ridiculously high and then it comes back down to that level. And I talked about this at length in a Discord post and later, and talked about how you could duplicate certain numbers and however low it goes might determine how high it goes because of that setup. What I specifically said was that even though that does look correct, that's not actually the midpoint of the move, which is important to note. So if you look at the midpoint, it's not actually there. That's not high enough. See that? It goes way beyond that. Here's what's cool. There is actually a midpoint level. And the midpoint level right here goes back to the midpoint on this particular trend right here on balance volume. It's the middle of the cat ears that's actually the duplicating value. This is where I got the 461 because I started looking at, and I did this already on stream, but I started looking, I don't want to do it all over again, but I started looking at where the heck is the middle, right? And I talked about how the middle could be right here at 3. There's that drop down right there. It's, you know, it's very strong as a possibility that it's just right there at 3. There was another one, and the other one was like at 330. And those were the two potential ones that I found that were the most likely as a midpoint because that's where they appear, here and here. And it really makes sense when you look at this structurally, because this is essentially like the caddy, the middle caddy breakdown, right, in this structure. It's not necessarily the center of the marker, which is something I could debate for hours and hours and hours. Because I thought about it later and I was like, well, there's so many ways to interpret a middle here. And I'm using one that's obvious because of the on balance volume, but now it's like shrunken because you're using like a different portion. You're basically going from this hook value on the 7th region, the 14th to the 7th, this area in January. That's where the drop is, which is like, this would be like your Judge Zern decision. This would be the hook value, drop. And I already talked about this because I had to use the shift. I talked about where this value was as the measurement of the middle, as opposed to going all the way back up to the top, because the shift is kind of like irrelevant. It's just there. So it would be like from here on. And so the center mark from that point is pretty different. You know, we look at that from that angle, it ends up being like closer to like 317 or something weird. So I had talked about this at length, saying that like I really wasn't sure. It's between 330 and 3. That's what I came up with. That's the really short version of it. So, and if you do that and you go from the bottom, if the bottom never hits another low and it starts at 246, I hit 245. The lowest that you'd have is 342. Let me get 246. Hang on. Yeah. So the lowest you'd have, if that's the middle, is 340. Then the next lowest you'd have is 375, which that adds up really well, doesn't it? That's right where it should be. That one's really nice. And then the next one that you have is 415. Oh, shoot, that also adds up really well because that's like right where this gap level is in the middle of this area and the bottom. So like all three of these are in the right spot. So I had talked about it at length previously. This is just a totally different way. It's the same concepts in some ways, in other ways it's completely different. But it's like, you guys are like, what? So it's the same, but it's different? Well, I mean, it's a different angle, but it gives you the same results, which is always kind of nice. They're slightly different, but it's not that different. We're still talking about 350 to 415, which is still this zone. Those are very much in line with all the other targets we talked about using various methods. So I don't find it to be that inconsistent. If I have to pick just one, I would probably use the 317 one, and there's reasons for that. But I think this is maybe the 317 to 320 is probably the strongest, in my opinion, because of, again, where I think the unbalanced stuff is. And the fact that it's like the average of the two just makes it feel like the most conservative, which would suggest that you, at the very least, would come up to probably hit that $4 mark. And I think that makes sense to me. So I'm looking at it like, all right, well, you know, in reality, there's a good chance that this is going to go up to $4, which would make perfect sense because it hasn't hit it and there's a gap there. But in terms of timing, this is what I was trying to get at. This actually is really similar to what we're experiencing right now. So from May 13th, which will be the week coming up, it continues up towards the top and it builds out along this parallel trend. Was this trend there before? I don't know. I hadn't really looked. I think it was. I think I've used it a couple different ways. It seems to echo like the bigger trajectory down from the all-time high. Let me use the 4-hour chart. Let's switch over here. It's pretty close to a similar trajectory as this SOS breakout from the all-time high. So if you look back here, that is the angle that's used, and that ends up being the same angle throughout. I don't know what that means. Just it is what it is. Maybe it's just the easiest one to use, or it's just the natural downtrend angle. Maybe it's because maybe because when you hit the creek the first time, you have to interact with it. So once it's made the breach above the top, which it did right here back in January. So I don't think it's some kind of like self-fulfilling prophecy necessarily. It's just like wherever that top is going to interact with that angle now forever and ever. So because now it has to come above there and hold, and it does. It does an M cross and it holds right there, and then it breaks out. So that ends up being like a trajectory that is then used in parallels from there on. So is that still at use? Well, again, if it is, that means that this doesn't necessarily break down, even though it looks like it's breaking down. In fact, it would probably still push to the upside going into Monday, which is the 12th. So if we look at it in the same manner, it wouldn't necessarily go all at once right now on something like IWM, but it would start climbing until that next Friday, and it would head up towards that marker, probably on some serious weakness. But if we're just looking at it from that point of view, it just implies that this ends up pushing up towards here even, not even stopping at that creek, albeit this is a debatable point, I suppose. But right here going into, let's see, Friday the 16th, that you'd have like a slow climb from now until Friday the 16th. And AMC, if it does the same thing that it did last year, which is a big what if, would essentially break out come Monday, have like a 2-day run and then come back down, right? The only issue that I have maybe with that theory right now is, again, the price action being that April 2nd date is really not there. It's not way up here. It's not at that parallel. It's only at the 203 mark. So if I were going to make like a serious complaint, I would probably suggest that that's it. You know, it does go beyond it last year, like a little bit. Yeah, I mean, it does. I guess it does. Let me double check. I don't want to say that and then have to take it right back. So April 1st, the gap down is on April 2nd, which is the same. So the April 2nd day, not the 1st, and that's where the gap is. Then it does come back there. It gets above it by that Friday. It sits on top of it. So it does push up and then comes back down. Pushes up 2 days in advance and then comes back down on top of it. That could be a creek jump then, if that happens. So where's April 2nd? Here. Everything else is kind of a mess, though. It's different. The gap down didn't happen on the 2nd, though. It happened on the 3rd. Oh well. So the 2nd was actually at 196. Well, that throws a wrench into things, doesn't it? Yeah, we still haven't filled this gap, though, to 202. So, I mean, there's that. Of course, it wouldn't be easy. So is it the 2nd or is it the 202 gap? Or, I don't know. The 2nd bottom is actually right where we're at now. It's like already there. But it didn't fill the gap. So I would suggest that if it does, let's just say it's the gap and it's not about the date as much as it is the gap. This could push all the way up to that level, go ahead and hit it, and then come back down on top of it by the 16th. So it'd be like this. That sort of adds up. You know what works really well on IWM is the cross trends, if you can get them, because they tend to be really sharp. This is really tight inside here. It's floating in the middle. But these cross trends tend to work really well on IWM. So let's take a look. Actually, that adds up to getting there a little bit in advance. But how do I know that's the right one? I do not. I need to look a little bit closer and see. What this is just a wave cross. I'm just trying to see where it is. There should be one earlier, which is here to here. That one's already there. hits the top. There should be another one right here, like a layup. If it's gonna be there, it's got to be there on that setup. This is ugly. Could be as early as Friday. Because I'm using this point down bottom on the 30th. If you use the lowest point right here, this suggests Tuesday the 13th. That's pretty consistent with what we would expect. It doesn't mean it couldn't break down here. It's possible. It does mean that Wednesday could be a pretty big nothing day, in theory. Yeah, I wonder if Wednesday ends up being a creek jump day if that happens, or like a creek test day. Comes back up and then sits down going into Thursday. Friday ends up being like a weird kind of a breakout day. Yeah, maybe. So it runs up into FOMC and then it dumps. I wouldn't be surprised if this is a weakness, though. If after FOMC it dumps down and tries to get really low, and then it responds with a little bit of a breakout, it kind of abandons the structure a little. That might make sense because you often would have like an SOW, and then Monday it does like some little run-ups. Like each day it runs up and then chops a bit. Runs up, chops a bit, and then it starts capitulating going into Wednesday of next week. Or the week following. Yeah, next week. That's right. And then it chops. And then it drops back down by Friday. That's a cat ear. And that's the end of it. That would make sense. So it wouldn't surprise me if this dumped pretty hard, even. It would be like a local spring, too. Because if this advances, you can see the bottom. See how that's like a higher low? But it made a lower low than that. So it's like a weakness, but it's a phase B bottom. So if this comes up and pushes up again, this is like an auto reaction, primary sell-off, then it reacts, comes up again, and creates a phase B top. And then it builds out into like a spring. And then the spring jumps. Yeah, an SOS would come above this particular line. It would be right there. So you'd have SOS with a backup. That would work into Friday really well. Because then you'd have a really easy way of keeping it essentially pinned all week. Because it opened Monday, yeah, roughly around the same levels. Well, week to week, it's kind of a nothing week. And then breaks out, comes down. It'd probably be gaps and stuff. Gap up, down, gap up, down. Some news on the weekend. Fails to continue. At some point, it needs to kind of get towards this top. So maybe it's like a last minute thing on a Thursday or something. There's like a final up thrust. Don't know. I'm not going to sell it that hard. I don't really think I care that much. If it doesn't go there, it doesn't go there. This doesn't even go to that top either on the parallels, so I'm using kind of like the strong end, but there's a weaker spot right here. I was using this guy. So it might actually already be there. Yeah, it's fine. That could work. Just sort of like a last minute extension. And then just craps out. It's pretty close. That's pretty close to where you'd want it to be. I think the crap out would be pretty devastating for a while. This is the one that happened last year, and it's very similar to what I see on SPY. I really think it's odd that this is like the same thing I drew here. I mean, it's almost exactly the same. It looks like I copied it, doesn't it? Like, it really does. It looks like I just copied it, but I did not copy it. That's super strange. But if that's the case, I don't know. S&P 500 didn't quite do the same thing. In fact, it's kind of the opposite. July 11th started to sell down, not a breakout. It's almost like inverted. So this drops into June and then runs up to the 11th. It's weird. So it still has a pullback, but it doesn't go... I don't know. We can't really do that, though, because you'd have to have the same build out here, and we don't. It's so backwards. So it goes up. It still goes up into May 17th, though. And then it comes down May 30th. Then doesn't stay low. So where is it going? I don't know. This is a different time, though, and this makes it... I feel like this one might not be very good to try to copy. May 30th. Let's just see what happens. I'm going to get rid of this stuff. Hang on. You get the idea. It's like through here. We'll just keep it like super straightforward. Through here. Well, let me take it a step further and like look at this. May 30th is a Friday. It's right there. So if it were to be more like SPY was last year in that regard, even though again, I think it's kind of already at the parallel. This lands on top of, let's see where it was in relationship to April. Same deal. So that's the gap down starting in April. It's a little different, but it's not different enough that it really makes a huge impact. It's just that the rest of this plays out pretty differently on IWM, but this actually went down low and back to that level. So there was a clear and evident distribution level here that it jumps over it and then comes back on top of it on the 30th. It's weaker right now. Man, I don't know. The timing is a little off. This is April 11th when it comes down, and then April 22nd is the bottom. This hits a bottom on the 11th. April 22nd, it's already up. So let's think about it in terms of that structure on the top. It's where it hooks on that structure. The gap goes through the top. There's a tiny little range at the top going into the 21st of March. Yep, there's the 25th. It's very similar. This is a bigger range. Well, I'm going to say it's 564 or it's 550. Those are pretty different, but those are the only two here that make sense because this is like a bigger LSPY drop. And it would make sense to get above that. And that zone has been in my eyes for a while, so I'm kind of like wondering if that's the one. It would have to get over that in order to come on top of it. If it's just this guy, then it's just down. Like it doesn't need to go anywhere else. It's already there. So it wouldn't go necessarily any further. Let's take a look at RSI back here. So this is similar. We have a pretty strong M cross bottom, and then we have an S curve, which is pretty similar to what we have right now. And it does go up on weakness. I'm on the, I think I'm on the 4 hour. If I'm not on the 4 hour, I'm on the hourly. I'm on the hourly. That's fine. It goes up on a bit of weakness here because you can see like once it already hit this, almost like the middle of the S curve, it wasn't even, it was only halfway done. And it already became overbought. It actually has a downturn. It has a downturn during this top. There's no massive pullback though, but the RSI does come back below. Just pretty classic S-curve stuff. And then there's this really ridiculous extension, right? Kind of finishes it off. But usually there's another target, so let me look backwards. That was it right there. So there's a long-standing trend. This is different than what we have now because we were in like a downtrend coming into it. But there is a trend there. Bottom to bottom. It could be like a macro situation. Well, let's take a look. It's already above that guy. That certainly gives you reason why you come back to 555. You can see it lost that level. Now it's recaptured it. You've got a push-up, a double push-up here. And then the price comes down below, which is kind of similar. You can see the structure is very similar. I'm looking at this area here and this area here. So that initial push up, there's a double M. This is really violent double M. There's a 1. That ends up being like a 50%. This first time it becomes overbought on the 1 hour. This is like a 50% marker. Yeesh. Kind of implies it's going to squeeze and then drop back down. AMC's fine. It'll be all right. Yep. This is the S-curve I drew, guys, which is good. Why draw it there? It's not like super, super high. I drew it from the bottom here, remember? Not the very bottom, but the bottom here. And that's where it hits. That's where it gets overbought, and then there's an extension up. S-curves are very inconsistent, though, because they can break down. I mean, I got to just put that out there. It's not a... It's just one of those things. Like, it's not an every time thing. I did make this S-curve already, though. So, this guy. So, I was instinctually just, like, doing it. Thinking like it's going to go here at this time, but let's see what the date is on that. Kind of looks like Thursday. So if we can find that S-curve, we can pinpoint the high potentially. We can figure out where that is. This is ugly. Where is that bottom? Right there? Yeah, and this is what I usually do is I look at where the creek jump is. That's usually where the middle is. So it's right there. It's consistent with what is normally the case for an S-curve, which means that this might be a little bit slower than expected in our local time. This is complicated. Why is it complicated? Because it doesn't have a nice simple cross. It crosses a widening here multiple times. 2, 3. It's either this, well, that's the breakout value. Let me double check something. Is there a volume hike right on it? And there's not really. That doesn't help. It's different because it's rising instead of having like a rail backup. So there's not a simple cross here. It's like it's there somewhere. All right. We're not going to like this, but I'm going to pull up the GAN box. People don't like this one because it's kind of ugly, but it's important. This is my estimation for where it's supposed to be. But I'm not 100% sure that that's the middle, 550. So I had drawn this way. I think I shared this on the Discord, that this could come down here and bounce out. I think that's still correct. This looks right to me. Maybe a little bit off. Should be a little bit lower. This could come all the way down to like 552. And then potentially this goes up to 595 even by the 9th. That seems a little faster than expected. But this falls very much into line with our expectation, because then if this comes back down, it's actually pretty much 1-to-1. This is by the May 15th, so it's slower. But this is also the 9th right here. So it's like the 9th is in the middle. We're already in the middle. Beyond it even right now. So we would be like here, which is like a week off. It's a little strange. It's a little backwards. But it would imply that you pump up here and then chop into the 9th or until the 16th or whatever, and then come back down to that level, which is not the middle. But it's like a more traditional center of the ears. What I mean is, if you look at the ears, there's a resistance and then there's like a support zone right here. And this actually comes back on top of that. It doesn't come back to the 50% marker as I drew it this way. So maybe I'm a little off with how high it goes. That's possible. Yeah, I could be a little bit off by how high this is. So this is one possibility, which is 595 by the 9th, or by Monday the 12th. It's probably more likely. Most of the price movement, regardless, if you look at the motion up, most of the motion upward on this is this should be like way over here. I don't know why it's way over there. Most of the motion upward on this is actually in the first quarter. So you can see like there's a 25% marker right here. Most of that trajectory, all that build out is in that first one. Then it's very flat in the middle. And then the final trajectory would be after the last 25. So if you look at it from that point of view, this is very close. So you'd expect it to be between probably tomorrow and then going up into the end. So long as the measure in the middle's right, and in this case, I mean, I did it right. This is the 50% mark. If I'm off by like a day, which means instead of Friday, it's like Monday. But really, both of these kind of show the same thing. So maybe Monday. I'll just say Monday instead of Friday. Just makes it later, safer, I guess. Sure. And then this was supposed to follow. I might have done this with the extended hours on. I think I marked off which trajectory it followed, which is the steepest one. So this actually would follow this guy the best. So it may be quite delayed, but this sort of adds up with a creek cross. This looks very similar to what we saw on IWM, with an advance maybe Wednesday into FOMC, then drop back down. Adds up pretty well. Let's get rid of this high version because that's not happening. Didn't come back up. Yeah, this works. So the flow is directionally with these Gann markers. They're just average flow lines. So you would look at downward. These are the downward trajectories. Upward, downward again. So this would go up maybe and then drop right around FOMC. This is some kind of a spring action, and then you have mostly upward trajectory then. It should follow that like steepest trajectory out from the middle. That's what happened here. It actually advanced early, backed up. It's very similar in a rotation. So it would be an advancement here, very similar. And then a backup. So I don't know. It may not need to hit that low right now. I don't think it has to. I think it could kind of float. And this actually pushes above the S-curve. I don't think this is the best thing to use because S-curves are weird and you can like fiddle with them and they're a little bit, I wouldn't say they're irrelevant. They're still really important, but they're curves. So it's like in order to get it right, you kind of have to make it pretty much like perfect. And you can see I'm off by the middle. So I don't know. This is a tough one. So it'd be like, I don't know. You have to make it like distance from the center the same amount in order to really make it symmetrical. So it's actually quite low. So this tracks. So if this goes beneath it, it might catch on it because it's part of the momentum curve here. It would catch on it, and then it could go above it a little bit, just like this was like below it. This comes back above it a little bit. That's the breakout. This is a pretty solid setup if it does this. So then it just advances, or it tries to advance, fails, comes back down, and then there's a big breakout with a gap, which looks like a Monday kind of thing. But it may even be as soon as Friday. This is very fast. Maybe Thursday morning. I don't know. This would have to be Friday if timing is correct, which I think it is, because that's the mark, 50%. So this would have to be Wednesday, and then Thursday, and Friday. Thursday seems a little odd. And there's another gap on Friday. It'd be like this. I don't know. I wouldn't say it definitely goes by Friday. I would suggest that it would be pretty easy to delay this and do like a Monday gap instead, if that's what is like makes the most sense. So I wouldn't stress too much about the I'm just saying, like it's not. There's no reason it has to gap either. I'm just kind of using it in reverse. But yeah, this would push up, come across into Friday. But I think at that point, who knows? It could just sit here and then go Monday. I really don't think it makes a huge difference. So either way, Friday or Monday. That's 593, which is very high. So the other possibility is that I'm a little bit off. I don't think I am, but I could be a little bit off with how high it goes. And the reason that I don't think I am is because this curve is like steeper than the other one. And I'm not using the top or the bottom. I'm using like the center of this first structure. The reason I did that is because the Gann markers match up with the other. And I thought that was way too convenient, you know. I was like, oh, that's kind of convenient. So there could be a second situation here where that's not the case, I guess, where, you know, it goes a little bit lower. We could try it one more time, but I just think it's going to be pretty similar, and it just probably won't hit as high. So that's a 595 hit. Let's see if we can find out if there's a 584 hit or 585 hit instead of the 595 hit. So that's like really low. I don't even like this, but yeah, it's like 580. It has to be in the middle, and then I'm looking at this like I don't know where to put the middle though. I don't have a center mark here. Let me use this first. I guess if you use the lowest possible dip here, then the highest number is 577. Take that back. It is 576. I got to tell you, that doesn't look right to me, but visually speaking, it looks off. But that is also like a spring. So it might be unwise to use a spring. It might be better to use the actual top here, that support instead, which actually looks more accurate anyways as a middle. If that's the case, so we go from the center mark being April 30th and then the middle being around 545.50, then the top is 584. That to me rings a little bit more true. I think that's correct. So then that's 584.88, roughly. That to me looks more accurate. So I'm going to use that one. It's not that 576 isn't a target. I think it is, but it's just that it doesn't really seem to want to work well with. There's very little interaction, if any, here. But then again, it did come significantly higher. This is interesting, where this ends up being at. Otherwise, it's much the same question of following the lines out, seeing if they work. I'm going to do it as best I can. It looks like 584.50. Let's just say 584.50. That works. So this is kind of interesting because this is like a weaker S-curve in some ways. Because in this regard, and it doesn't, again, the middle is like here. It's not where the bottom is. But there would be a desire to come here, which makes sense. Which would be like backing up to check that top. I say weaker because the second push definitely doesn't move as far as the first push. The first push does a full 50%. The second push can't do a full 50% unless it comes all the way back down to which I guess could happen. It could come all the way back down to 545. It just makes it another question mark. Like, I don't know. So this came all the way down to 545. It could make the same move there. But it doesn't need to. If it holds fast where it is, which I think is likely, it's a possibility. Anyways. Yeah, I don't know. Maybe this does come all the way down to 545. To do something really, really ugly tomorrow, then I guess it could come all the way down and then break out. It's a matter of opinion, I suppose. I don't think it has to do that, so I'm going to like sort of reserve judgment on it. Yeah, to me it's like targeting, looks like it's targeting that area here. 555, not 550, or not 545. It's a pretty significant difference. So I don't see any particular reason to like overly question this. It's just where does it stop kind of thing. It certainly seems possible that it could come as low as 545, but then it makes a bigger move. So the other option here is that it does come down. This is kind of backwards. I think the first one worked a lot better. This one's a little bit harder to do, to be honest. Thursday, Friday. Well, that makes sense. I hope so. Maybe he's announcing he's going to China. I don't know. Yeah, that does align with the days. Of course it does. I gotta be honest. I don't find this one to be as easy to use because it's just a tough, there's no simple connections with some of this stuff. This definitely follows, but it's walking down. Weirdly, it kind of looks like it's walking down the Gann levels. You can see right there, here, here. But here's why it doesn't really track. Because unlike the other one, the S-curve now is kind of irrelevant. It's like already gone way beyond. And then the S-curve would be like way over here somewhere. So I'd have to like find it again, I guess. That's why this one looks a little bit shifty to me. I'm going to try to do something kind of similar. Yeah, it's the same story though. See, both those levels would matter. I don't know. It's the same area. Well, regardless, this would come back up. So when this one, if you did this measurement, which is I think is also fine, it's the same timing. It's just lower. It's at 580 instead of 584 instead of 595. 584 is a logical level. I mean, if you look back at it, that level 580 exists as a pretty significant support until it doesn't, and it really never came back and checked it again after March 4th and 5th. Tried to, but it doesn't come back up. So it would make sense. I don't have any other reason to suspect it goes there other than that March 4th deal, but and 583 has been targeting it a lot. So this would look like on RSI, and it's doing it already, that this drops and then all of a sudden it just goes really high and gets overbought, like crazy overbought. And the 4 hour never got overbought. So that on the 4 hour, I think it would push into overbought territory. If you go to like the 4 hour time frame, it got close and then it dipped away. So I think on the 4 hour, this would just look like a reversal that just breaks back up and over and finally gets overbought. that's it. I don't think it's going to be bullish after that. So you got to keep in mind, like, that's kind of the end of this pattern. If it does fulfill, that's where it's going to go, and then it breaks out, goes really hard probably into the 12th or 13th. But then based on what we saw again last year and what we see with IWM, I think the whole market goes into a kind of trans mode going into the end of the month where it chops and heads down. And based on this and the other one, to some degree, they're not significantly different levels. Remember, it doubles the value that you think is the middle. So this one versus this one is pretty insignificant. A few bucks here and there adds up at the top. But in either case, it would come back to this zone, which makes sense. Why wouldn't it, you know? Like, it totally makes sense that this would be where it comes back to, between 550 and 545. So no matter what happens after that pump going into the end of the month, you're probably going to end up back down here. And it wouldn't be like an immediate drop necessarily. It'd be just normal kind of nonsense, you know, listing down and breaking down levels, so on and so forth. So yeah, if you need to get the SOW, I don't know where that's coming from. That must be an extended hours thing. You could drop here a little lower and then have a big explosive move going into the end of the week, and then it would start crapping out and head down. This is the inverted head and shoulder if it's bullish. But I got to be honest, it doesn't really make any sense to do this unless you're going to go up again, because you wouldn't push above this top unless you're going to be bullish. So there's a huge implication here, which is you've made a higher high. So if you do that, yeah, you can come back down low, as low as you need to go. But if it makes that higher high here, that's a pretty bullish signal. Now it's just going to flag until it doesn't. And I mean, it could go on for quite a while. This obviously, once it hit the 30th, broke out again and just kept going. But in reality, there's no reason like that couldn't have just chilled out longer. So we could be talking about the same thing where we rally into, maybe IWM goes sideways, but SPY just rallies. We're kind of in this weird mix-up zone right now where we're not really sure, because it doesn't feel to me like it needs to. But I guess what I would say is if this hits here and breaks out, that's an M cross on a bigger wave. And there is a possibility it goes lower and does it later. So I'm going to keep this on the chart, go way later. But this kind of implies you go out and you just keep running up into, I mean, it sounds kind of crazy to me. It went really far though here for like a month. That's a bullish market. What it might be is that everything is a bit weaker. So if this just doesn't go above the top at 576, then it's weaker and it's probably going to crap out and come down to new lows. If it does, then it's pretty strong. It just has to find a bottom, but any retracement is really fine. So I'm saying that this makes the most sense for a head and shoulder retracement, but really it doesn't matter. Like, it could come down really low and it would still be fine, because any retracement here, as long as it's not, and even a double bottom, this is still bullish because it made a higher push. But that's all that means. So the only time this is bad is if this pushes up and it just doesn't get above that peak from March 26th. If it just doesn't quite get there and then it comes back down, if you break the creek, then you're going to go to a new low, almost assuredly, which is what a lot of people have been saying. So it'd be interesting to see if that pushes higher and holds up and then, you know, comes back down. I think that'd be really fascinating. That'd be a very different outlook. So, anyways, you get some kind of buy up and then go out into July 11th, and this would imply an incredibly huge move, probably to come up to like 630 or something. Seems a little out there, but then again, what, Booksy? Well, then again, we left this trend like behind. I don't know if you guys see this, but there's a really last minute cat ear trend that's really high. And it actually lines up really well with the 630 marker, which I had marked off earlier for other reasons, because of the trends here, which also kind of support going up to that area. But there was a head and shoulder measurement that I did, and it kind of supported the idea of coming up above 600 to 615, which is really where the top is. This is why this is interesting, because now I'm looking back at this and I'm like, oh, well, that could be that level right here, manifest, right there, that hook. Yeah, could be. If it hits 583, I might be off a little bit. But if it hits 583, it's already above this peak. It doesn't really matter how high it goes, as long as it doesn't go too high. Maybe it's like 582 or something. That actually matches really well with that rise. That'd be strange, wouldn't it? We'd have to have some kind of news that supports it. You guys are funny. Reading your comments. Yeah, I told somebody I would do Dell, so I'm going to do Dell. And we could look at something else, and then I'm probably going to be done today. But this actually doesn't look completely wrong to me. It's suspiciously on point. It's a lot of big questions, though. And you have to understand, like, this doesn't necessarily mean that the market is bullish. I think a lot of people would think this is like a bullish market move. It's a recovery move. But what would ensue could very easily be a long-term series of kind of cat ear breakdowns here, which is possible. So, I mean, you got to take into consideration what could happen after that. There's a ton of stuff. Just because it pushes up doesn't mean it can't come down again and retest these lows going into near 2026. It's a question mark in my brain. It'll be really different, guys, really different if this doesn't go above this top. I think if it goes below here, it's almost guaranteed that it's going to come down. If it does this move early and it's low, I think it's going to come down probably again, really low. Very different, very different setup. Cannot stress that enough. This is just if this S-curve fills out to 580, which seems possible. That's good. I need to roll my options, but I think I called it out right, and I think I was just a little early. This is gonna look nasty at first, and then it's gonna go. And it makes sense to me. It hasn't checked those marks yet, so. All right. I said I would look at Dell, so I'm gonna look at Dell. Yeah, sorry. I enjoy when I get it right. It was like spot on. I knew where it was gonna be. I was like, dude, if it drops, it's gonna go right there. Gravity. Yep, there it goes. Palantir. No, what? I don't know. Maybe it does it again. I have no idea. I don't think it came above the top, so it may have. Looks like a double top. That creek is low, low, low. So, I mean, if it buys up now, it's really just a rebound play. And then I would still think you'd be mindful of possible downside. But yeah, I mean, it could go up. It looks like it would be going back to retest these EMAs right around 90 to 90 bucks. Sure. Palantir might be a really good swing, though. Oh yeah, it's super oversold. Let me check the hourly. Yeah. Yeah. Let's take a look at another time I had a ledge drop like this. That was right here. Woof. Reversed. Actually, it looks like it had one more drop. Yeah, because it hit the low and then it did it again. But it stayed semi-divergent throughout. See that? There was like a double drop there, like a boom, and then another drop. And the RSI stayed divergent on the hourly here. It's similar to this one. There was a drop, went oversold, and then there was a second drop. And then it was a decent buy up for the gap fill back to the top of the drop. Top of the drop. So both of these do the same thing. They both have the rebound here and then here. There are different severities, but you can see the triangulation is pretty straightforward. This one doesn't quite make it. This one goes a little too far. So, what does that mean? It means there should be like one more drop. Maybe it may not be as severe. We should probably also look at something else. Let's take a look at where the EMAs were. It was below, so that's not the same. But there's no other time it gets that oversold. I don't know. It's an M cross and it likes to drop, so it likes the 1-2. I don't see it inconsistent. Let's see if there's any other place where it doesn't do that. I mean, this is an ugly example of one that maybe is more relevant because it came way down, but it never fully recovered. It only ever came back up. This auto reaction came back up to that floor. And that was it. But this would be an example of one where it didn't do a second drop right away. And it actually continues down in extreme weakness. Much the same. It gapped through these two right here. And then goes below them. It looks really similar to that. See the curling down? So first it kind of pushes away from it, heads back up, finds that support again. Let's see where that support is. This might be just an easy money trade. That's why I'm looking at it. It looks like, I don't know. You'd probably just have to use your brain. That's the level right there. And it's near where it tops off on RSI. So this is really different. Tops off on RSI here in this area, which it's already at. There's multiple hits, 1, 2, and then there's a support here. And there's no support check there. So those are the two ears. So I think It's a little different, but I think it's actually this right here. That definitely is the middle. You can see it on the a little bit easier on the RSI. You can see the low M and then the jut upward. Usually there's like a dip, extreme dip in the RSI, and then it comes back up again. And it actually made a higher high while the RSI was coming down. So I think this is going to go from here to potentially as high as 115. And it'll be like a zone, 114.50 up to 116. That's the area. So there probably will be a rebound. And then I think, unfortunately, if it's anything like the last time, it's probably going to drop back through it. And it's going to be nasty if it does that. You'd have to watch it carefully. But it'd basically be like way down here. Yeah, that's that lower parallel too that dropped into. And it heads down to this level. It's all kind of working pretty well. That makes sense. It'd come right down to here. So it's going to be at like 90 bucks. So really short term, you could probably trade an 8% on that. And if you're fortunate, it doesn't just dump right away, then you would get that push. I would keep it extremely light and cheap and not put a lot of money into it. But Palantir up to 114.50 and then dropping all the way down to potentially 90. I know they blew out earnings, I'm aware. And it's okay. It's not as big as people were saying it was, but yeah, I think it goes down to gap fill. This guy. That's a creek check. Now, after that point, I think it could have some pretty significant rallies going into the week of the 19th or the 13th. So you can watch it there. It may even come all the way back up to the top again. There's no reason to think it can't build back out now. Who's they? Nobody can do anything to you, man. Just do what you want to do. It's a pretty memey stock, I guess. There's a lot of people that have a lot of money in it. You get really angry when you call downside, but like it's a pretty easy to read divergence here. I figured it was going to drop. So aha. Let's take a look. Let's see what the options chain looks like. Let's see if it's like blown up. My cat's bothering me. He wants to go out. He's going to be really disappointed when he go out there. I'll let you out. Immediately going to turn back around and be like, why'd you let me out? There's no food here right now. Yep. There's not. All right. Well, I mean, they're kind of expensive, but I mean, you could do one. I don't know. It doesn't. It looks like it's just gonna pop right now, and then probably drop tomorrow. It'd be weird to see it go down. It's already at 12%, so it wouldn't even be. Excuse me. Sorry. It wouldn't even be like green on the day. So it'd be a really fast trade if you want to make that trade. I'm thinking it probably has to back up. Check it. This happens into the end of the day. It'd be weird. Like the last hour. I'm going to try. I'm going to try it out. I'm not quite there yet. I'm not sure if it needs to go a little bit further. I don't know. I didn't really draw this like super tight. Nah, it's definitely that level. That's a backup check too for a lot of things. All right. It may not go that high, but it definitely looks like that's the level that I would pick, which is kind of like the top of the gap here. I may even say like 112 and then just leave it at that. The prices for these are tanking off a cliff. So that's a little dangerous, but I don't know. I think if it goes, it'll probably pop pretty good. I'm going to try it. So the trade is very small. It's down 12%, but I think you're looking at about a 50% reduction of that. So a 6% move. And it could come up as high as 115, but I would suggest that it's already like going way up. That's weird. It just ran ahead of me. All right. It was down by like 10 cents. I tried to grab it. No, it's got this wick. Anyways. So I would suggest that actually there was a little cattier here. When it breaks that, it's probably going to run up. If it doesn't break that, it won't run up. So if you want to wait for confirmation, you could probably put 100, 150 on it, maybe double that if it goes all the way. But I'd leave cash on the table because I still think if it doesn't, especially here, I think there's a high risk that this sells down again. Tomorrow, it may not go immediately to the downside. It may just come back down here. But then the next day, which is a Thursday, especially if this kind of sits below Thursday, that's the day that you might have like a really significant downward move. And I think it needs to happen from a technical standpoint. It would be really good for the stock. Fundamentally, it may not make a lot of sense here, but it is what it is. I would suggest that that works pretty well. And they need a pretty significant move down. That happens. Okay. Well, I'm in this trade. I'm going to see if I can get a short position if it comes up above 312. And I'll just short it down to like short, quote unquote, probably to next week. Do like a week or so out and down to 90 or something. little bit farther than expected and then get out. Maybe if it gets to like 93. The thing is a lot of times they'll like approach these bottoms and they'll have these big bounces. And so instead of like the lowest possible value, it may be worth getting out even here at like 96, because a lot of times it'll like react really strong and kill your position. But I think that after that point, it's likely going to come down at some point down here. So first, it has to make, it may even make a lower low today. It's possible. We talked about the M. It did seem like it was missing maybe a little bit of down. So it wouldn't surprise me if this drops like one more time and then rallies. But I do think it's likely going to rally back up. I'm just saying. Seems very likely to me. And then tomorrow, I think down. I said I was going to look at Dell. I'm going to look at Dell. I have not looked at Dell since I had a Dell, which was back in like the, geez, a long time ago now. Probably the year like 2000 or something. I don't know. 25 years ago. I don't think there's anything necessarily wrong with the company, but I think that largely they used to be like all about their, I don't know. I guess there's nothing really wrong with them. I feel like they kind of fell out of fashion for a while, but maybe they've come back. All right. So we've got what to me appears to be a bit of a weakness. I mean, you can say whatever you want to say about that, but it does seem like it dropped through that level. That's okay. It just means that in the future it may need to come back down. Actually, that is even steeper, that trend. That's the cat ear recovery. This is like that classic GameStop cat ear and then recovery, but then it has to find its footing again or it's never going to go. Right, so then we use this. It's a little different. What now? I don't want that. People texted me. Garbage. Okay. Well, I mean, this is probably your parallel structure then. So we use this and it should work. Yep, looks good. We need to at least find like the middle, which I think is right here on that gap. So let's make this one like different, like heaviness. This is right there. That seems about right. It looks like a chart that's trying to kind of correct downward a bit. It's like curving down away from the trend. The trend is kind of weak. It held strong here, but then it pushed low, and now it's dropping through. So this actually may have already been an SOW of sorts. It doesn't mean that it has to be down forever. Like, it doesn't mean it has to drop off the face of the earth. It could, because technically, like, if it's a creek check, the creek's like way back here, you know, real low. So you have to keep in mind that that's a possibility that it eventually would come back down to 44 bucks. Fundamentally may not ever do that. So that is a possibility. And then likewise, just looking at previous tops, like, does it want to come back to a previous top? Probably there's a gap here. This would probably be more likely if it did come down. But what's also noteworthy about Dell is that the widening did it again. And I was thinking that a minute ago, like, it looks like it's trying to push out, but if there's another higher one, it's doing it twice. So the last time it did this, it actually went into a sort of a bottoming period along that trend that it was breaking. And then generates like 2 new trends. So it could be a situation where this does end up having some kind of topping action and then ends up coming low, but then still has like a recovery later, you know what I mean? Back towards the top. This is way, way in the future, but I'm just thinking out loud. So that to me seems a possibility. We have not checked those levels. And that looks like, again, that February, March area right here really being retested. So yeah, let's take a look. Okay. Yep, that makes sense. So I would say that if Dell's going to have a higher push here, it's probably going to go up to 107. And then I don't think it's a trade unless it breaks out. There's too much unknown right here about what happens. If it comes above, it could hold here and then break out, but it could also break down. And then you have this pretty decent chance it's going to come back down. It may not make a lower low, but it's going to come back down. And I would say that, yeah, it's got a lot of room on the daily to run up. This looks like an S curve. It's kind of like what we just talked about. It's almost the same chart. But that makes sense because the S&P 500 is pretty tech heavy, so your tech stocks are having maybe a similar looking rebound. Actually, this looks pretty straightforward. It seems like Dell is likely going to come back up. I want to make sure I'm getting that one right, but that would point to like a later bottom. And then this would point to a later top here. July 11th. It's kind of in the wrong spot, isn't it? Maybe not. Maybe this is all there is to it. It's just going to kind of hook going up into July 11th. And then come back down really far if it comes down again. This follows with what we saw in SPY, so I think it's reasonable. No guarantees, just observation. And then this is your creek, so it's kind of trying right now, like to hold on to it. And I say kind of trying right now because there's certainly a low it could go if it doesn't hold it. You can see it's way back here. So, I mean, it could drop pretty darn far before it pops. This is sort of similar to what we saw on SPY as well. I'm not trying to like say everything the same, but it is really similar. Like in theory, this could have a drop all the way down to like $79 and then go, and it would be fine. It'd still be in the S curve. Is it a little bit out there? Like a little bit, yeah, but I think it's more likely that whatever this trend is the one, if it did drop, probably wouldn't go all the way down. Maybe more likely that it comes down to like 82. Again, if it's a significant enough drop and it needs to do that, I think it could come all the way down there. And that would be a weakness. If it doesn't, like weakness that later would be capitalized on because it would later come through that trend and then never go back above it again. But the the overall mission here would probably be to get back to this 102 top. And I wouldn't necessarily guarantee it beyond there. I mean, if it goes higher than that, cool, but maybe like 101.50s to 102. So is this a good trade from where it sits? It's just a matter of opinion. I don't know. Let's look at the 4 hour. That's a weird creek right there. It's very strange. All right. So there is a possibility this goes down to this gap fill at 84 and then it rallies. And that could change how far it goes to the upside. There's another possibility that I'm seeing that seems pretty likely based on the movement here that this doesn't go past 89. So if it goes to 89, I didn't mean to do that. If it goes to 89, it'd probably be a decent pickup. And that looks like it's going around the 1 hour. So if it, see how it jumped over the 1 hour here and then it went back up really far. So this would be like another dip through that 1 hour 180. And it also looks like a retest here of this floor. So there is a chance it goes really low, which wouldn't surprise me. That looks right. We saw that on a macro level. But then zooming in, it's like, could this be down here by Friday? And would that be sufficient potentially for a move up? Yeah. So honestly, like everything below 90 could be a big buy zone. What if it just goes? When it just goes, I don't know. You don't get it. I mean, I think there's a good chance that the whole market's going to rally, but I think you have to just sort of take it for what it is right now. And, you know, there's also an impending probability that there's a dump going into the end of the week. Even though we're already dumping, this is a pullback kind of week. I think it's as straightforward as it gets. So, so yeah, maybe you'd see the RSI. If it does come down, probably see this RSI hook here. I don't want to use that tool. Probably see it hook maybe a little bit more, and then it would drop down. And once it resets here, then that head and shoulder looks like a head and shoulder, but I think that's pretty reasonable. I think that would make sense. If it's higher up, then you're good. And if you're lower, then you're good. Just wherever it is. Makes no strong difference. And then I would suggest, yeah, maybe a 106, 107 strike, but probably would get out at 102. So the trade itself could be anywhere from, I mean, that's a 14% move. That's a big move. To 30% move. I actually really like this chart. It's nice. This is kind of weird. I don't really like that. It looks distributive. So again, I'd be really cautious about this, especially like tomorrow. If it pumps up, I feel like there could be a big rug pull. But after that, then I think it's in good shape. To me, that looks distributive. Especially if it comes down really, really low. I think you'd be in good shape to buy it back. Yeah, CISO, I charted that one, and the alert went off today. Sheesh. Yeah, it broke out. It went way up. I don't even know where this chart is, so I don't know if I charted it right or not. Sometimes I get it sort of right, and sometimes I'm like really right, and then sometimes I'm like way, way, way off. It's probably on this one. Okay, I don't know what happened there. Just flipped out. Oh, it may have been again an extended hours thing versus something else. I don't know what this is about. Why it's way over there, I don't know. No, that looks worse. I'm not sure why I put it way over there. I think we just talked about it breaking this creek level. And then if it does, I had an alert set. So that alert was 78 and then it ran up to $1. And this is probably where it's going to find resistance here. So I sort of missed it, I guess. It went off like the beginning of the day today. I think it went off at 70 something cents. It was like right here. So I had an alert set if it breaks out above this level that it would be a potential runner. And it is. But my alert went off, so it's gone. I said it would be a better buy if it resisted and then came back down because then you could buy in again. And it would probably do this. So maybe we're in a similar situation. But like all things, just take a look at the hook value. I mean, it could be running up to $1.50 from here. That's still really far. But I would just be cautious. You know, if you bought at 70 cents, you may have made some really good money. But there's going to be levels of resistance all throughout this zone here. So it's going to be a bit of a wait and see if you're in it. See what happens. Yeah. Oh, so yeah, I talked about GME's retracement in a previous session, and I had sort of hoped this would cross up and over here. So the biggest problem is that last time we did this, which was right over here, we crapped out and we went low, and it just started sliding down. So it looks to me like an iteration again, but it's sort of the same idea. You have a big pump, and then you have a cat ear 1, cat ear 2. Cat ear 2 needs to cross up. I mentioned that this looked kind of crappy because it was having trouble. It's like flattening out. It does that thing, right? And then it has this weird little last minute try to pump, and then it fails. And it doesn't even go very high. It just kind of fails to break the creek. It did do it right here. See that? So it did do that, unfortunately, last Thursday, and this is a hook. So if you're concerned about it and you're looking at it, I had already done this a couple different ways. If this goes really low, down to like 22, and then cannot manage to break back out above 26 or 24, this is the ice as I see it. It's sitting on it right now. So the interaction with this level is very critical. It's very important. It needs to make supports here. And this is where it's going to have the most trouble distributing. If it chops, you could be in a situation where that's like an LSPY on this range, a bear flag, and it dies, right? You don't want that. I understand. That's essentially what I'd be most cautious of at the moment. And it's not any different than what we've experienced like back here where you have kind of a sideways action and then sideways action and so on and so forth. It keeps doing the same thing over and over. I do think it's already over. I mean, it is. It's already oversold. So it's like what happened back here. You gotta, again, you're kind of starting this build out. It's a much smaller setup. So just so you know, like this does come all the way back down, but there's this really massive upthrust that happened in the middle. right? That starts the ears. That's going to be the one that throws everything off. So this is like an S curve to the downside. It ended up being a full S curve off the middle here where this thing starts capitulating. And this is a strange one again because of the nature of the way it moved. Might be a bit tricky. It's not that complicated. This should be the middle. If it's going to go all the way down, it should be right on the bottom, which makes sense. It should be like right there. So yeah, there's a chance this goes down to 2382, which is consistent with what I had over here too. This is like 2350. There's another level at 2470. If it does a full S curve, I think that's correct. Should be right off that middle. Yeah. But I mean, it just depends. If you think that the support is higher, and I don't know, it's debatable. I think it's trying to go back to this April 9th level right here. And that seems very straightforward to me. So right there. So I like that. I like it when there's an obvious level there. I don't like when there's not an obvious level. That is also where it started taking off in and around earnings, and then the drop down that happened March 7th. So all in all, I'd say that's a fairly accurate target. I think that's a pretty good likelihood. Now, from that point forward, if it does go down there, you're going to have to see a rebound that jumps a couple things. So one, you're going to look at the RSI. RSI has been lately has been jumping before the price in a lot of these cases. So because the price action has been kind of weak, you see your RSI push early. It doesn't guarantee that it's going to go like moonshot. In fact, what actually seems kind of likely here is that this comes up, and then as it's going down again, it's kind of backwards from what we were expecting with AMC. But then again, maybe it's just faster than I'm experiencing, like a bit of a question mark in my brain. Why wouldn't GME be setting up like it did in May? If it's going to move at the same time. I mean, it could be if it's really early. There's some similarity in this. You can see the level here. This is a more classic bottom structure. So this goes from April, again, April 2nd being the drop zone, and then it breaches it, and then it comes back down and retraces low and then takes off. So there's actually maybe a lot of similarity there because we have something similar. Oh, it's not exactly the same. And April's like way different though. It's so different in this one. Well, I was going to say that it could be the same, but there's a problem, which is that when this went up and pushed above the top, it did do it like we thought it might, but it did it backwards because then it comes down and makes a new low. So it made a higher high here like it was going to advance, but then it fails to hold the low. That would have been far stronger. So you have this drop and it advances, but then it comes down low, which is kind of screwed up. And then it doesn't come back up to the top again. I'm not trying to be really negative on GME, but a lot of the stuff on GME has been very difficult to read as bullish. I have a lot of trouble looking at this saying that it's bullish. It looks bad. This looks like a UT and a UTAD, if I'm just being honest. As it showed weakness right here off this support. And remember how it came down through 22? And it did. It dropped 22. And it even like dipped below that level. They brought it up for what's clearly like a UT. And then it dumps down below that level. It didn't go significantly lower than 2076. But it was definitely a distributive action. Like somebody's trying to get below this level, they bring it up to sell it back down. And you can see the RSI, the U shape is really obvious. That pump and then the drop. This is kind of what we're talking about on AMC, like needing this pump and then the drop. We just never got it, not really. And so there's a confusing kind of element there. They've decoupled a lot. But the rest of this, I'm like, if that happened and that was a spring and this was just like a push up and then you're going into like a spring action, you'd still have to come back down and retest the floor. And I'm like, well, where is the floor, you know? I don't know. Phase B floor would be like way down here at 21, which is sort of what we're starting to maybe expect to see. It's just very low. Yeah, and I read this as like an SOW. So if it does come down again, it's going to come down and like camp. This doesn't make a very good case for AMC running. I know. It really doesn't. So what would make a kid case for AMC running here? I don't know. This does not make a good case for it. This kind of implies that it's not bullish and that it would come down here and like trade the bottom going into June, which, you know, is what it is. The way this would be bullish is if this goes ahead and it finishes down to 2340. And if it hits 2340 right here and it holds, that could be bullish going into the week. So let's say, for example, this is an extremely steep creek. It does look like it is steep. Did not make that cross up. May even be like parabolic. Could be like an arc even. But for now, let's just draw what's there. I don't know. Yeah, I don't know what's going to happen right here. Because if this chops up and over, it's kind of like the other one I just drew on the other chart where it comes over here first and then it comes down, in which case it's on top of that. And that actually is good to some degree because, so this would be like a LSPY kind of deal. And then this could be like a spring. Because technically at this point, it doesn't even have to finish the S-curve because it could be a shallow spring where it's kind of bouncing and then it drops. And wherever it drops to, there's a gap here at 24. That could be it, in theory. If it lands on top of that, and then Monday, man, I mean, it's really anybody's guess here because if you take this down and it does go all the way, it could go there by Monday. It could be right where it needs to be. That's the Monday spot right there. It kind of just depends on how fast it goes. So if it does a bigger chop here, and I have it off to the side, it's pretty much the same thing. The ideas are the same. It's just LSPY, LSPY, yada, yada, yada. Bear flag, bear flag, bear flag. So that's a possibility. And that could actually be very bullish if then it breaks out. As long as it comes above Monday, comes above 26. Then you're essentially in good shape. You're in like breakout mode. You're heading out. And then you come back to the top. And this is where the magic has to happen. It does kind of track with the 32-bit here. That works. So it's like a really exaggerated slingshot. Then we could interpret this as like a middle of the cat ear kind of deal, which is strange, but it is what it is. Where this is like a big buy-in. I wouldn't be really worried about it unless it just sinks below 23.5. I think if it stays above this level, it's fine. I think if it goes below that level, it could be bad. You get stuck. It just would signal something that I wouldn't expect unless it was distributive. So this is fine. So either 2374 or maybe even not below that. Maybe even this level right here, 2470. Both of those look like good levels to potentially have support. And then I think you could pump after that. Well, couldn't it come all the way back up? I mean, anything can happen, guys. And I don't really think this really matters. Like I'm trying to say, like, it wouldn't really make a huge difference if it came up really high right here first or not. You'd still have to watch it and see if it's going to make a high or low. And so any kind of up thrust should be treated with skepticism and not as, oh, it's running. Especially right now. Why not just hit here and bounce out? I don't know. I'm just looking at the chart. Here's what happens if it runs, okay? Let me just put it this way. In order for this to run, this would have to be like a bottom with a spring already. So maybe there is a chance that it comes down again, but it doesn't go significantly lower. It just drops slightly below. Maybe it goes to 25.50 or something, right? But regardless, in order for this to be an advancement, it needs to come back above this kind of core level at 2751, but it'd have to do it by sneaking between the ice and the creek. So you can see there's like a steep creek here and a really steep one. Those ones haven't been made yet. So if this were to advance, like they haven't been broken yet, it would have to go to the first one, hold a support, jump over, go to the second one, hold a support, and this is like a buy-in, right? And then it has to come over the middle. There's a lot of big question marks here, right? That in and of itself could be bullish. If it continues to jump these, then it just go parabolic and it'd be gone. All right. But that's a lot. So there's a lot there that would have to happen for this to just flip and change character and just go up instead of going down first. And the whole time this is happening, you'd be questioning if it's about to rug pull. So it wouldn't exactly be fun. But yeah, if this happened, especially if it stays kind of high and then has like steep drops, I'd be pretty bullish on it, I think. You know, if you saw some pretty massive cat ears, like that's a 1-2 and then a 3-4, I think I'd be pretty bullish on it. And if they were like really high and kept pushing resistances, that's a good indication right here that it might indeed go very parabolic and just go something like that. And then it would just rocket. So on average, we're always kind of doing this, but it's a similar setup as some of the rest of the market. On average, it's kind of like what AMC we were talking about. Like AMC could go up first, but it doesn't quite give it enough oomph. I think the same could apply here to GME. If it goes up first, just depending on how high it goes, it could be like a hook, but it is still have a retracement to check these levels if it doesn't do it slowly. If it goes down first, I think there's a better chance it's just going to go, but after it goes down. So AMC is in a bit of a different spot because up doesn't really signify much of a breakout in this case. It's not really high enough even if you wanted it to go. It would have to sort of show its support. So I almost prefer that it just goes down and not mess around with like punking people out here. So yeah. Not a big fan of that particular type of action. You get to this stage, it's like, is it a spring? Is it an LSPY? I mean, it looks like a cat ear. It looks like a distribution on the top. So I would suggest it's more likely that this is a LSPY that drops as opposed to a spring. But, you know, what, Booksy? I don't know, guys. GME's weird. It does weird stuff sometimes. I've misread these before, so I don't know. I don't want to make it sound like I know everything about everything in this case. There's no. I've seen GME do weird stuff like that where it does like it'll come up and it'll create like a base, right? Which is what happened over here. And then it advances. This to me still reeks more like a distribution because it didn't make those nice bottoms. It kind of stayed high. And it just feels not as good. So if I hadn't done this, which looks more distributive to me, I'd be a little more bullish. Had it done a series of like bounces that stayed a lot higher, I would be a bit more bullish. I'm sorry, I said it backwards. But it has done stuff like this where it makes like an early advancement over like a creek. The problem is it came above the top, which is not normal to come above the top and then come all the way back down. But I mean, it's not impossible either that this then creates kind of a dips and then just rips. I feel like I've seen that before on GME and some other charts. By contrast, just take a look at what happened over here on that top. This is what I'm trying to say. It does peak and it comes above the top. It's clearly like the same U shape. There's a platform and then it builds up. But you can see like once it came down, it just kept breaking down. That's more normal. I wish I could pull an example out of my hat. Maybe this guy. So this is one that, actually no, because when it broke the trend, it didn't come back up again. Maybe this one, but this is still like a retracement. This one pushed up higher. There was nothing wrong with this. This one was like perfect. See, it doesn't go over the top until it's ready to break out. It just looks like distributive action, at least in the short term. But then again, this is a range and this is a range, and they make up a bigger range. So it could be that the distributive action was really more about this upper area, in which case you could have a change of character. Again, this being like the example for that, where this is like a change of character and retest this, and then comes back up through the range, holds those levels. And that's the M, so I don't know. Maybe it's not going to go down again. Maybe the change of character is going to happen. It'll happen around this line, though, at least to start this guy. So this will become like an anchor for movement, and it looks like a wave right now. So for example, if this rejects away from it, then you can see the fulfillment of this S-curve in that rejection on the opposite side. And that gets you down to like those lower levels. Maybe only down to like that region here, but that's the buy zone anyways. It's kind of right in between the two. And so that would look like a, if it did that, it'd be like a, not a double bottom, but like a spring on the final drawdown. More than likely, I suppose, is that it takes off in this area. You probably get a lot more confirmation from here, which is like 25 up to 26, which is the top, which makes sense because that's the floor and the intersection of the creek. So it's triangulating that zone. That's the wrong one. It's triangulating that zone going into Monday next week. That's why I'm bringing it up right there. So this would be the big, like, what if, big breakout kind of moment right here. Or breakdown. I mean, I don't want to be one-sided about it, but if it jumped there, I think it would be a breakout. All right, I'm done. I need to watch some tickers and fiddle my stuff, and then I got food. Yeah, that's the right way to do it. Probably. I'm not going to be able to look at GL. I got to go. I'm like passing out. I'm like dying right now. I can't even. It's way too much. I go hard when I go and I burn out. So that's what I did today. Streamed like 6 out of the 8 hours today in the market. That's a lot. I would not trade. I mean, I'm just saying, you guys do whatever you want to do. I just would not trade AMC like it's about to go to the moon. I'd trade it like it's going to go to maybe 4, and then that's still the average area, and then I would probably leave it at that, and then I would wait for it to come back, because I think it's likely going to come back down and come to new lows. Yeah, I haven't looked at Tesla since I got out of it, and I figured it would come back down pretty low eventually. It may come down before he comes back, and then when he comes back, it'll like explode again. He said May, but it may slump until that. That would be an easy catalyst. So. Yeah, I don't know. Everything kind of looks like it could use a good flush and then pump. This is like weird. Actually, this is kind of like an inverse of the other thing we talked about. We were talking about this this flatness right here and how you would expect it to, like, if it's gonna go, you'd expect it to like pump up and then dump. And it's kind of like the opposite, where this is like curling up. And so you would expect like the same, in my opinion, you'd expect like the same thing. Like a good flush down to hit some reset level and then just fly. Legitimately. Like that's kind of the same idea that we have kind of to some degree on AMC right now. So yeah, probably heading up towards that level. But it needs a good like dump, like good dip. It's having trouble on this resistance at the top. It needs to like have that kind of pull down, shake out. In my opinion, this is usually what we see. I'd be pretty bullish on that if it had like a really quick drop down to 127. I think then it jumps the creek and just flies. There's really nothing stopping it once it jumps that creek. And it should just go. It's probably going to end up being, this is Fang. Yeah, it's going to end up being that floor. It's all like really simple. said that last time, and then it dumped. Well, it did go up, but it just didn't really produce a lot, unfortunately. You have to have a lot of money on this one to really trade the... But this would be like a second attempt, I think, at this. So, I don't know. Maybe really bullish. Second attempt at this widening here. It's actually made a bigger widening as a result. So 155 is where the gap is. It's where the edge is. I think it's probably where it's pointing to. Yeah. It's a slingshot. There's a lot of potential trades right now. There's a lot. I might even pick up some 159s, just one of them, see if they're cheap enough. I think the options chain on Fang is kind of bleh. There's not as much open interest and volume as I'd like, so you got to be careful. But yeah, maybe just for the heck of it. End of May, 160s. Yeah, there's no bid and ask. This is the problem with this one. This just has no options traded on it. Nobody wants them. There's some life. There's some life on 150. That's not too bad. Yeah, this is what happened last time. Whatever. If I get it, I get it. If I don't, then I don't. I'm just going to keep it really light. I have shares in this. So they pay a dividend. I think it's a good stock for a long hold. I have a lot of shares now. I'm accumulating slowly. Moving stuff around. Might even pick up some more today. Yeah, I got enough. Let's do it. Pick up a couple more shares. It's kind of expensive, but I think long term is a huge amount of potential. So I've also been buying Bitcoin again. I started doing that about a month ago. Starbucks calls are still up 80%. I got 95 calls for June 20th. Oh, I got the call. Well, that's surprising. For AMC, I have $4 strike and $3 strike, and they're spread across the whole end of May into June. I wanted to kind of get more on the back end, but I wasn't able to roll the ones that I wanted to roll, so I wanted to just push it out into June just to be safe in case there's a weird delay or something goes backwards, you know? The market does that sometimes. Where it just kind of flips on it kind of flips on its head what you would expect to be the motion. So I was trying to do that, but didn't really work. Didn't get any takers. I'll try again today. It's okay. If it doesn't work, it doesn't work. Let's take what I get. All right, guys, I'm done. I hope you guys have a good one. I will talk to you tomorrow.